Dale Carnegie said, "Most of the important things in the world have been accomplished by people who have kept on trying when there seemed to be no hope at all. Arise, champion." Now perseverance transforms average, everyday people into world champions. So the key to victory, the key to success is never giving up. And in order for you to do that, arise, champion, you're gonna need a strong why to prevail, a strong reason to keep going. You see, the more difficult your obstacles are to overcome, the more you must keep your reasons for succeeding in front of you. Vince Lombardi said, "The difference between a successful person and others is not a lack of strength, not a lack of knowledge, but a lack of will." Success is not about how you look on the outside. Rise, champion. You might look like a Lamborghini, mean and clean, everywhere you go. But see, I'm interested in what's under the hood, because that's what really matters. When life hits you with that brick, and you get knocked down on that mat, and I'm talking to the Linda Rouseys of the world, the ones that have been knocked down once and twice, and everybody out there is calling you a failure, everybody out there saying it's over, what are you gonna do? Rise, champion. I don't even think they should be able to call you a champion until you've been beat, because even losers keep going when they're winning. But when you get hit with that brick and you on that mat on your back, rise, champion. Then we separate the cream from the crop. Only when you're down 25 points on the biggest stage like Tom Brady, and you come back and we call you the greatest of all time. Abraham Lincoln said, "I am not concerned that you have fallen. I am concerned that you arise." Champions make adjustments, not excuses. Get up! The ground, the mat, being on your back is no place for a champion. Get up! Arise, champion. Now you at that crossroads. The decision you make now will ultimately define your legacy. I'm speaking to the Tiger Woods of the world. Each loss, each setback, each heartbreaking disappointment will try to disguise itself as failure, but it's all a lie. And let us not grow weary of doing good, for in due season we shall reap if we do not give up. Many times on the road to success, you're gonna feel crushed, exhausted, and alone. See, life is not like Little League. Arise, champion. They don't give away participation trophies. There's the champions and everybody else. It's one or the other. How do you want to be remembered? Each time life knocks you down, arise, champion, you must bounce back with an even greater hunger to succeed. The ones that have the hardest time doing this are the ones that have weak whys. Now you can only go as far in life as your why will carry you. Champions have self-awareness. They know why they want what they want, and that why carries them to the promised land. The why is the birthplace of all champions. She is the mother to all legends and all the greats in every field. The more deeply you are connected to the thing you're trying to accomplish, the more likely you are to achieve it. Natural talent and ability, that's all good, but it won't carry a quitter. So you gotta find a why that makes you invincible, that you can run through walls with it. Get up! Nietzsche said, "He who has a why to live for can bear almost anyhow." And I'm not ignoring what you're going through. Get up! And I'm not gonna sit here and lie to you and tell you it's gonna be easy, because it's not. It's gonna be a struggle. You're gonna have to fight and claw and scrape your way up out of this thing. But you can do it if you want to do it. Now, are you a pretender or are you a champion? You can't have a testimony without first having a test. The whole world is watching you right now. Get up to see how you respond. Show them what you made of. Never give up. Dale Carnegie said, "Most of the important things in the world have been accomplished by people who have kept on trying when there seemed to be no hope at all." Arise, champion. Now perseverance transforms average, everyday people into world champions. So the key to victory, the key to success is never giving up. And in order for you to do that, rise champion, you're gonna need a strong why to prevail, a strong reason to keep going. You see, the more difficult your obstacles are to overcome, the more you must keep your reasons for succeeding in front of you. Vince Lombardi said, the difference between a successful person and others is not a lack of strength, not a lack of knowledge, but a lack of will. Success is not about how you look on the outside. Rise champion. You might look like a Lamborghini, mean and clean everywhere you go. But see, I'm interested in what's under the hood, cause that's what really matters. When life hits you with that brick, and you get knocked down on that mat, and I'm talking to the Linda Rouseys of the world, the ones that been knocked down once and twice, and everybody out there is calling you a failure, everybody out there saying it's over, what are you gonna do? Rise champion. I don't even think they should be able to call you a champion until you've been beat, because even losers keep going when they're winning. But when you get hit with that brick and you on that mat on your back, rise champion. Then we separate the cream from the crop. Only when you're down 25 points on the biggest stage like Tom Brady, and you come back and we call you the greatest of all time. Abraham Lincoln said, I am not concerned that you have fallen. I am concerned that you arise. Champions make adjustments, not excuses. Get up! The ground, the mat, being on your back is no place for a champion. Get up! Rise, champion. Now you at that crossroads. The decision you make now will ultimately define your legacy. I'm speaking to the Tiger Woods of the world. Each loss, each setback, each heartbreaking disappointment will try to disguise itself as failure, but it's all a lie. And let us not grow weary of doing good, for in due season we shall reap if we do not give up. Many times on the road to success, you're gonna feel crushed, exhausted, and alone. See, life is not like Little League, a rise champion. They don't give away participation trophies. There's the champions and everybody else. It's one or the other. How do you want to be remembered? Each time life knocks you down, rise champion, you must bounce back with an even greater hunger to succeed. The ones that have the hardest time doing this are the ones that have weak whys. Now you can only go as far in life as your why will carry you. Champions have self-awareness. They know why they want what they want, and that why carries them to the promised land. The why is the birthplace of all champions. She is the mother to all legends and all the greats in every field. The more deeply you are connected to the thing you're trying to accomplish, the more likely you are to achieve it. Natural talent and ability, that's all good, but it won't carry a quitter. So you gotta find a why that makes you invincible, that you can run through walls with it. Get up! Nietzsche said, he who has a why to live for can bear almost anyhow. And I'm not ignoring what you're going through. Get up! And I'm not gonna sit here and lie to you and tell you it's gonna be easy, cause it's not. It's gonna be a struggle. You're gonna have to fight and claw and scrape your way up out of this thing. But you can do it if you wanna do it. Now, are you a pretender or are you a champion? You can't have a testimony without first having a test. The whole world is watching you right now. Get up to see how you respond. Show them what you made of. Never give up.
Good morning, good morning, good morning, good morning. What's going on? How is everybody doing? So I went to school for film, and so I make commercials and videos and all this great stuff. But I never thought I would be a star in the new movie Hiding from Rona. How are you guys doing? Everybody is starring in the same movie.
Morning. Great
Morning.
morning.
Hiding from Rona.
Morning.
You guys good?
Good morning.
Yeah, can you hear us? We've been saying good morning. Great morning.
Oh man. Yeah, it's interesting. Interesting times. This morning we're gonna switch the format up just a little bit due to one of the individuals on the call participants schedules. So they asked me, could they teach immediately the beginning of the call because they had work, and I was like, well, of course. It's fine with me. Allows me to sit back and still wake up. So that's what I'm gonna do. Is we're going to allow for him to teach now. Dr. Flexi, oh, she can hear us now. There you go.
I'm trying to mute you so you don't hear my background.
I got you muted. Don't worry. Good morning.
Okay. Thank you. Good morning.
So yeah, we have someone that wants to teach this morning. Also, just want to check in and see if anybody else needed to teach or wanted to teach. We'll take one more if someone wants to do that today. If not, then we are good to go. All right. So what we're going to do is Cannon, are you ready?
Yeah, I'm ready.
Okay. Do you want to control the screen or do you want me to?
Whichever's easier.
Okay, I'll let you control it.
All right.
You know how to share your screen?
I share my screen. Does it start video?
Nope. It's share screen in the middle.
Oh, okay. So yeah. All right.
And take it away, man.
All right. So I guess we'll be talking about how to do the ORS strategy or the optimal verso strategy. And I guess the first thing you'll have to do for this strategy. So the first thing will be hold on. All right. The first thing we'll be looking for will be something called a cross on the vortex on a 5-minute time chart. So what we'll have to do is go down to the 5-minute time chart.
I'm gonna back you up, Kenny.
Go for it. I feel like I'm missing some steps. I have to explain the time charts and stuff like that.
Explain what the different tools you're using. So don't go straight into the rules, but explain different tools you're using. And then the why. And then the why behind them, like why we use those things in the first place.
All right. So what I just did, I went to the 5-minute time chart, which means that each of these candles, so these blue and white boxes, is a 5-minute, is showing what happened in the market for the past 5 minutes, and we past 5 minutes. And
you're doing fine, man. Don't worry about the candles. More
don't worry about the candles. The more the
indicators that we use.
All right.
So I would start with the moving averages. Work your way down through the vortex and the maximum.
All right. So we have the moving averages right here, the orange, the red, and the green line. This is just an average of all the markets oh, not all the markets, yeah, all the time frames and all the uh, and just is an average of the market moving for this specific the pound USD. And what we can do with these, we can use them as support and resistance, and we can also use it to see and get an idea of where the market's going if you use it correctly. Then we have the vortex on here, which is a comparison between the two currencies, between the pound and the USD, and it's comparing each other's by the value of the currency. Then we have MACD 4C. This is showing the momentum of the market and the MA of it, which then helps us to read the momentum a little better, and not better, it just gives us more information. I guess did I explain something else, or is that good?
That's fine. And then what you want to do is explain what those moving average periods are that we use. I know you have 3 up there, but we've used mainly 2.
Oh yeah, we'll use mainly 2. Okay. So we have, and what do you explain it like?
The periods.
The periods. Okay. Okay. So we have, so you don't need to use. So the 2 main net moving averages we'll be using for this strategy specifically will be the orange and the red one. The orange period, no, yeah, the red period, sorry, would be 20, or the length would be 20, and the orange one, no, sorry, we'll be using the red and the green. Sorry, ignore the orange one. And so the green one would be a 3, and that's an EMA, and the red one would be the 20. And did I have to explain something else about the MAs, or just point them out?
No.
All right.
And then what is the vortex doing? Explain that to us. Why do we even care about the vortex?
So the vortex is basically comparing the 2 currencies by the value, and how strong it is compared to each other. But it's like not really. It's not compare. How would I explain it? What word would I use?
Currency strength. It's currency strength, remember?
Yeah.
So what are we comparing? We're comparing
The strength
of one currency
to the other, right?
Right. So how does that relate to the price action up top? So just explain the
question. Okay. So so the blue usually will always be the pound, or the first currency, and then the white will be to the USD, or the second currency in the name up here. And if the blue, or the pound in this case, is above, which means it is more powerful and is stronger to the USD, and if that is true, it is most likely going for a buy, since the pound will be more powerful to the USD, and vice versa. And so if the blue is above the white, it means going for buy, and the white below the blue is going for a sell, basically. And yeah.
And then what is the period that we use for the vortex now?
To get that strategy, or the period.
What's the length? The period.
The length. 6.
Should be 7. So go ahead,
Oh.
change that to 7.
All right. Then
Cool.
MACD or no?
You can explain how we use it. Explain the difference between the selling and the selling momentum, buying and buying momentum.
All right. All right. Then so we then have the MACD down below, and this basically is showing the momentum of the market, and basically this, if the market's green and going up, is for buying momentum, and if it's going down or red and going down is selling momentum.
Okay, cool. Now I think you can go through the 5 steps now.
All right.
What optimal reversal is designed to do? Designed to do 2 things.
All right. So the optimal reversal zone is, I guess we'll go over what's the main use for this, is to catch a reversal zone in the market. So that would be either a small pullback or a full-on reversal or major reversal. And an example with that is that would this strategy would most likely be able to catch major reversal zones like around here or here, and it just helps us catch these zones so we can catch the pips either for the buy or sell in either direction. So yeah, so the first step would be to catch a cross on the 5 minute. So we're going on the 5 minute time chart. Wait, what? All right, so we're looking for a cross on the 5 minute, and in this case, we'll be looking for a sell. All right, so we're looking right here. The market is currently here, and now we'll be waiting on the 5 minute for a cross, which will be right there. Boom, and then we'll be dropping down to the 1 minute time frame, and looking for a 420 cross with the moving average, so the red and green lines. Hold on. All right, so we got a cross right there. And once we get that confirmation, we go ahead and look for an MACD EMA cross, and then we look for the retest. So we got our cross, and then we got our retest as well. So it came up and came back down. Then we go back up to the 5 minute time frame, and we look for MACD cross, no retest, but a 0 line break. So we got the cross, but now we're just waiting for the zero line break. All right, we got it. Then we're going to be hopping up to the 15-minute time frame again. We'll go higher, and we're just looking for a MACD MA cross, which did not get yet. God. Which we just got, and then I went a little too far, but we would have entered the trade somewhere around here, and we could have maybe helped out with that. Oh, I lost it. I was right here. And since we're able, this is the wrong chart. This is I don't know. Damn it. Missed it.
Did you lose the?
Yeah, I lost it.
Don't worry about it. It's mainly important to communicate the steps. So what was that last step 3 or 4 um, in allowing for us to get in? So you mentioned the vortex cross, which started out 420 on the 1 minute was the next step. What was that third and fourth step? Just to be clear.
So the third and fourth step was the MACD MA cross and retest.
Okay, and
the
you did
fourth
point
step,
that out. And what time frame was
and
that on?
that was on the 1 minute.
Okay, and then what was step 4?
Step 4 was the MACD cross, but no retest, but with the zero line break
On what time frame?
on the 5 minute.
And then what was the rest of that? Because I don't think you talked about that the rest of number 4.
Then we had to get the MACD MA cross. Oh, the rest of number 4?
Yeah,
Hold on.
there was a part B to that. So you talked about the 5 minute. Was there any other thing we need to worry about for number 4?
The MACD MA cross on the 15.
Okay, that's what I didn't hear you speak about.
Oh.
But I know you lost your area, so it's fine.
Yeah.
Okay, and then what are our exit rules, Kenny? How do we exit out of this? What would we be looking for?
We would be looking for, it's either based off opposing cross on the MACD MA on the 15 or 5 minute time frame, or depending on some other Fibonacci numbers.
Okay, and lastly, where do we put our stop loss on the entry?
We put the stop loss always above the crosses on the 2 MAs.
Can you give an example of that? So like just an area that we will put a stop loss.
So for this main, let's say that we try to get a retracement on or ORS on this right here, we would put it above the red and green, so above here most likely, or put it if you wanted to get a little closer, right there.
Cool. Cool. Good job, man. Good job. Good job. Any feedback for Cannon? He stepped up to the mic, started us out this morning. He went you still at work today, right?
Yeah.
Yeah. He's still a part of that essential group of people that are out in the field doing their job. Let's give him some feedback this morning. You can unmute yourself, especially those that are already trading in the night call.
I guess for the teaching part, I guess maybe watch you do it another time and kind of like follow how you explain it. So it's makes more sense to people who are brand new.
Okay, thanks, Robert. Anybody else have any feedback for him?
I'd say about the same thing. Just the way he teaches it. It sounds like he knows it, but it's just how to teach it. He may not be used to teaching. So that's it.
And my feedback is, as always, use your notes. There's nothing wrong with having notes when you're teaching. That keeps you on the flow. It keeps you grounded in understanding how you want to introduce this concept to someone brand spanking new. If you have your notes, it won't trip you up.
Yep, thank you. Anybody else have anything you'd like to share before I take over?
You also say, Cannon, great way to step up. Really appreciated you stepping out and explaining this process that can be seemingly complicated. So it takes a lot of courage to step up and explain. I think you did a good job for your first time doing it. I would say just practice. Reading your notes, I agree. There's absolutely nothing wrong with it. The repetition of it is going to improve, and just the more you teach it, the more you get better at it. And just relax and explain it, man. But I think you did a good job for your first time out, and I'm looking forward to seeing you or hearing you teach it again.
All right. Thanks.
Yeah, Cannon, definitely, man. When I heard you were gonna step out and wanted to go first, I was like, oh man, nobody does that. Like, let me go first. That boldness right there is encouraging, and I love that you did that. 100% agree. One of my best friends is on this call, Fred Burns. He's also a tremendous teacher and trainer. But one of the things that I've learned watching him is he would at times really write down everything that he's going to say. Like, step one, I'm saying this, the full sentences and everything's pretty cool. And so that really helps you get your flow to where you're able to just kind of go out for your words and pay attention to how I share also some others, and really just highlight things that you like. And really the whole reason we're doing this is, one, we want to be able to show that we understand it. I do know that teaching is not everybody's, it's not easy for everybody. It doesn't come naturally, and they haven't either been trained in it. But one of the reasons we do it is because it does show that we understand it when we can communicate it to someone else, right, that doesn't know. And then second, really, I want you guys to be able to take the knowledge that you have and to be able to pass it on to somebody else. I just think that's how we pay it forward. So, man, I'm proud of you, bro. For those that don't know, Cannon is one of the youngest, if not the youngest. I think he is, because Darius is older than him. He's the youngest student in our community, and I'm really proud of him. You're 16, right?
Yeah.
16 years old, and he is already done with high school. I mean, he's outstanding. He's excelling. And so, yeah, man, I'm really proud of you, bro, and I'm excited for your next time up. So thank you for that, man.
Thank you.
Well, let's take that to awesome job for the first time up, Cameron. I had typed in the chat, good job, but awesome job for taking the lead. It's Queen.
Thank you.
Man, that is a lot of courage, a lot of courage.
Yeah. Cool, man. Well, I'm gonna take it from here.
All right. You can just turn it off from there because I don't know how to turn it off from my side. Or pause there.
Right.
All right.
Cool. All right. So I'm going to I'm gonna go through and just focus in on the core basics of optimal reversal, and then I really want to talk about best practices. That's how I want to really kind of phrase it, because optimal reversal is ultimately a trade filter. It's going to allow for us to filter out trades and figure out when there are good opportunities in the market. Give me 1 second, I'll be sharing. I'm missing my toolbars. I don't know where they are. Trading View's only showing me part of my screen.
Chuck, all I see is your picture.
Oh yeah. I'm letting y'all see all that while I'm over here struggling with Trading View. Looks like it. I reset it and we should be good to go. But thank you for letting me know. Here I go. I'm about to share my screen. You guys should be able to see it now. You guys should be able to see it now.
Yeah, we're good to go.
All right. Okay, cool. So again, good morning. Good morning. This morning we had Cannon step up. He wanted to teach and he started us out. What I want to do is I want to just follow up behind him. Normally the format is I would teach it first and then anyone else who wanted to teach it could come afterward. One of the reasons I like to do that is because I like to model it for you guys so you guys can see what you really want to do. One last check in. When we explain it, one of the things that we want to explain is we want to really talk about the movement in the market, because all of this is really based upon the movement in the market, how the market moves. Market is always going to be moving in really this wave form, right? Nothing is just going up straight, it's going straight up or straight down, right? Within it, there are impulses and corrections, right? All day long. And within these impulses and corrections, there are also more fractal, like on a lower standpoint, like this whole impulse, there's an impulse correction, right? And we can break it down. So within the waves and within the impulses and the corrections, there are waves within the waves, right? So like for instance, let's come up to a higher time frame really quick. This guy right here, which was pretty much straight up, right? For the most part, this was straight up. But we know that when we break this down, this area right here, from here to here, there were some pullbacks, there were some corrections. Let me mark this off and we can look at that. We have what appears to be just a straight line, but when I drop it down to the 15-minute chart, what do we see here? We see these impulses and corrections. So you see impulse correction, impulse correction, impulse correction, impulse correction, impulse correction, impulse correction, impulse, right? So the market is stopping. It's not just going in a straight line up and down. There are impulses and corrections, impulse corrections. And so it's from that base that what's happening there, that basic principle that optimal reversal is used for, right? We're using optimal reversal to do two things: to catch the major reversal. That's the very first thing, to catch the major reversal. What does that mean? We've been moving in one direction for a long period of time, and then we decide to go the other way, right? Optimal reversal can get us in the trade up there to catch a major reversal. However, we have been talking about what the most powerful thing optimal reversal could be used for. Okay, the major reversal is the hardest thing to catch. Look right here. How many times did this look like it was going to go up? Right? It's still in consolidation, moving sideways, still moving sideways. The major reversal is going to be the hardest thing for us to catch. However, the continuation after a pullback. So the other thing that it's designed to do is to have a continuation after the pullback, okay? That's the other thing that it's designed to do. And so what is that? So we have the impulsive move, here's the pullback, here's the continuation play, right? Impulsive move, here's the pullback, here's the continuation play. Getting in on these continuations is going to be one of the most, the best ways, the best practice for optimal reversal, okay? It's gonna be with the continuation. Why? The trend is our friend, okay? Trend truly is our friend. And so what we have here is we have this impulsive move, right? Here's a correction, get in here. Impulsive move, here's a correction, get in here, right? Impulsive move, here's a correction, and so on and so on. Correction, let's go, right? Continuation, we'll take those continuation plays off of the retracements, okay? So that's what we're looking for. We're looking for, we can try to catch the major reversal, but good luck. It's tough, right? We're going down, nope. We're going down, nope. We're going, right? It gets a little crazy, but once we get into the place where the market has already now made its move, already now started to move in a direction, then that's going to be where we really want to dial in, because now we can really take advantage of how precise these entries can be and have very little drawdown. There were trades that I was in this week, and I'm still trying to get there, because optimal reversal, we're dealing with the 1, the 5, and the 15-minute time frame. Now, I told you guys that we can scale up, right? Anything that we do with optimal reversal, because it's not just a strategy, it's a system, right? We can scale up. So these same confirmations that we're about to go over and what Cannon showed us already, they are they can be scaled up to higher time frames, so we could still operate by the same principles. Now, again, continuation, major reversal, that's what it's designed to do. And what we do is we use 2 moving averages, right? We use 2 moving averages to help us, because we want to be trading in the direction of the trend. One is a simple, regular moving average. The other is an exponential moving average, all right? So we have the exponential moving average is a 4. You notice Cannon had different colors on his screen. It does not matter what colors you select, okay? However, mine will always be white. My 4 EMA will always be white, okay? It's just so that you know what's going on. If you want to use different colors, your candles may be different colors, don't worry about it, okay? That doesn't matter. As long as you have a 4 EMA or a 20 and a 20 moving average, all right? Again, mine are white and blue. My 20 is a blue moving average, all right? And so what we're looking at is we're looking to compare, right, a slow moving average to a fast moving average. That's what we're doing. The majority of moving average strategies are connected to a slow moving average and a fast moving average. Our fast moving average is the 4. The 4 represents. So what are moving averages? Moving averages are measuring, right, average price, right? But it's measuring it based upon whatever period we select. So when we talk about length or period, all this really means is this is based off of 4 candles. So the last 4 candles is being averaged together. For the 20, it's based off of 20 candles, right? If I was to change this to 100, it would be based off of 100 candles, right? It's going to be further along. It's going to be, you can see, it's not as connected to the candles. It's loose. You know, it's kind of giving you an overall picture, all right? Always explain moving averages. The faster it is, think of like a motorcycle. It can zig and zag and change in corners and do all that. The slower it is, right, the slower it turns into a car, and then it turns into a truck, and then it turns into like a semi, big tractor trailer, right? The more candles you use, the wider these turns are going to be, the more it takes to actually change directions, okay? So, and this is actually pretty cool. And a lot of times you'll see people use some slower moving averages also. So I know that we use the 4 and the 20, but check this out really quick, just so that you can see this. Let's bring in one more moving average. So I'm going to keep this as a 20, and then I'm going to keep this as 100 for now. Actually, let's make this 200, okay? So what are we trying to do? We're trying to trade with the trend. So we want to be in the direction of the trend. Very simple. When my 4 is above the 20, when my 4 is above the 20, my white is above the 20, the market is moving in a bullish way, okay? When the 4 is below the 20, it's bearish. Now, check this out. But look right here. My 4 is above the 20, right? It's bullish. However, look, it's below my 200. So the market still is kind of overall in a bearish place. Until when? Until the 4 broke the 20, okay? Until the 4 broke the 4 and the 20 broke the 200. The 200 is this yellow line. The 4 and the 20 broke the 200, okay? Now we've kind of shifted into not just a temporary pullback or a temporary bullish move. Look, now we are actually, we've shifted into, as you guys saw, was a really gigantic bull run, okay? Now, remember what we said optimal reversal is designed to do. It's designed to catch the major reversal, right? So as Cannon pointed out, it can get us into trades down here, right? It's harder to catch this. You have to be patient. You're going to have to deal with losing confirmations, getting them again and losing them again until it's really ready, because a lot of times the market will consolidate at these levels. However, when it is ready, check this out. Remember what we just said. Optimal reversal is designed to catch the continuation. So look right here, my 4 and 20 broke across the 200, and what did it do? It simply retested. This is a continuation. Imagine now catching the trade from here, right? And dealing with now this type of movement, okay? Same thing applies right here. You have the 4 and the 20, it was crossing. Now look, it crossed our 200 moving average, our 20 and our 4 crossed the 200. And look at this, pulled up, there's the retest, and now imagine catching optimal reversal from here, okay? That's just a little jewel, and we'll talk about this later, but I wanted to show you how moving averages work. You're dealing with fast moving averages, right? Faster, right? More slow, right? And then like super slow, okay? So this is what we want to do. We want to think of it like that. Now, what we're going to do is we're going to utilize these moving averages mainly to trade with the trend. We want to trade in the direction of the trend. We want to not try to fight against the market, but we want to roll with the wave, right? We're just little, very, very little, very tiny. I don't know what the tiniest fish are. You could call us shrimp. We're shrimp really in these waters, right? We may not even be shrimp. We may be something smaller than a shrimp. We're a shrimp to a shrimp, right? That's us in these markets. We want to participate with the great whales, right? We want to move with the momentum, right? That's where we want to go. We don't want to play against that. Even in a reversal strategy, we want to move with the momentum, and that's why we use our moving averages, because we don't want to just get in randomly. We want some type of confirmation. So one of the first things that we have is our moving averages. The other thing that we have is currency strength, okay? So back in the day when we first started with this strategy, we used an indicator called currency strength indicator. What this thing is doing is similar, very similar to the vortex that we saw on the screen with Cannon. What this thing is doing is letting us know the strength of the currencies. So as he pointed out earlier, there are two currencies that are always in competition against each other on whatever pair that you're trading, all right? In this case, we have the British pound, which is in the base position. We have the Canadian dollar, which is in the quote position, okay? We are looking to trade the pound against the CAD or the CAD against the pound. Now, when this market is dropping right here, what's happening is the pound is weak, the Canadian dollar is stronger, okay, for that period of time. Or if they're changing strength and weakness for that period of time. Now, what's happening here when it's going up, the pound is winning, increasing in strength, while the Canadian dollar is getting weak, which is causing this thing to rise. Now, because that's such a fundamental key to why these markets move, we use this thing called currency strength indicator. And I know it looks crazy right here, but I'm gonna zoom in and we can actually break this down a little bit better. Right here, right, you can see that all of these things are different colors. Now, these colors represent a country. All right, they all represent a country. Now, the way the currency strength indicator works, or the vortex indicator, the higher that you are on this indicator, the stronger you are. The lower you are on this indicator, the weaker you are, okay? So what are we trying to do? We're trying to, and this is something you guys always want to teach, we are trying to exploit strength against weakness, okay? This is the only time where bullying is allowed, okay? This is the only time where we're going to allow this online bullying. We will allow for the pound to beat up on the Canadian dollar. That's totally fine, and we will take advantage. We're going to watch it. We're going to participate in this fight, okay? It's the only time. Now, if I break this down, you can actually see that each one of these colors represents a different country. So yellow's the euro, green's USD, and so on, okay? Now, in this area that I just boxed up, right, we have two that are pretty much standing out from the crowd, in the crowd. We have this green guy, which is the US dollar, and we have this pink guy, that's the Australian dollar, okay? Now, if I take everybody off, except for those guys, you can see when there was a shift in their strength versus the weakness. You can see right here, this is where the US dollar went weak and the Australian dollar went strong, okay? At this point, if we went to their chart, you would see, okay, what are we doing? We're doing, this is USD and odd. So odd USD, right? That would be the pair. Odd USD would be going up. It would be bullish. Why? Because the Australian dollar has increased in strength against the US dollar, okay? That's what's happening. Now, we are on a chart with pound and Canadian dollar. So who do we care about? The pound and the Canadian dollar. So what we want to do is turn those guys on and get rid of everybody else, okay? And now when I go back to the chart, let's take a look at a couple things. Let's zoom in to this area right here. We can see where we went bullish, right? You can see when we went bullish right here. When we went bullish, notice what happened. For the most part, okay, the orange stayed on the upper side, right? And the red stayed on the lower. Now, I can change this just so you guys can see. Actually, I can't. Let's bring in the vortex. Now, one of the reasons we use the vortex, because the vortex actually changes directions. It loads faster. The data loads faster. So I'm going to take the CSA off. Vortex loads, does the same thing, essentially, but it's doing it faster. But watch, same thing with my moving averages. Watch when I make this thing slower. Watch when I turn this to a 50. Okay, when I change this to a 50, look right here. We can see that this is more of an overall strength, right? There's not a lot of changes. Watch when I change this to 100. 100 candles. Now look at that. Do you see how this thing pretty much stayed in strength the whole time? Okay, why am I showing you guys these things? One is because I want you guys to really understand what these indicators are doing. But two, once you understand it, I want you to be able to apply this knowledge. We are trying to really hit home runs with our entries. Our entries are some of the, like, I mean, it's a fire entry. You're talking about very little drawdown, if any, okay? Very little drawdown, if any. However, a lot of times we are in trades that can go on and on and on. So if you understand that you can change your vortex settings to something that's slower, that's gonna change less and less, you're going to be able to also, right? So let's say on one screen, you have it at our normal 7, okay? Because we have it at 7 normally. But then maybe on another screen, you have it at 100 or something like that. So you can actually see the overall strength and weakness of that currency pair, okay? Hopefully that's making sense. This longer term moving average can help you, right? Identify where we are at overall, okay? 420 underneath this 200, we're just bearish. Now, are we having pullback? Sure. But notice how powerful, once we got under that 200, notice how powerful those 4 and 20 crosses are. So 4 and 20 crosses down are very powerful. They're taking you, I mean, let's look at this. Once we got underneath, we had a 420 cross right here. That 420 cross right here is actually taking us down about 400 pips, okay? This 4 and 20 cross right here took us down about 500 pips. Well, before it crossed back up, so let me see. It took us down about 200 pips. Then the other one took us down about 300 pips, okay? That's how powerful it is when you combine it with the overall trend, right? Optimal reversal to catch the continuation, right? We're gonna get back more into that again. Currency strength, we are measuring the strength versus the weakness. We're trying to exploit it. And again, our settings are 7 for that. That's our settings for the strategy. And I'm also saying play with making this thing longer and looking at the overall plays, okay? 200 may be a bit too much, but who knows, right? 100 or 200, just see. But just notice how, let's look at the 100. Notice how you can see that overall strength, right? You can see small pullbacks, but overall, this we would have had our moving average letting us know this is for the long haul, and then also our vortex, okay? We're combining, we're stacking them together. Now, lastly, we have one more indicator. It's called the MACD. It is called the MACD. The MACD, we want to type in MACD, but we want to look for the one by VKNO 422 plus signal line squatter, okay? This is the guy that we want, okay? This is the guy that we want. Now, I'm gonna go ahead and give him another thumbs up, increase that light. All right, that's the one that we want. We want this guy. So you want to add that to the screen. Now, when you add them to the screen, you're going to see this down here. So I'm gonna zoom in a bit, okay? This is our MACD, okay? Now, MACD stands for moving average convergence divergence, moving average convergence divergence. So it is showing us what's happening, right? From a moving average standpoint, it's showing us strength, it's showing us momentum, but it's also showing us convergence and divergence, all right? Convergence and divergence. Now, a couple things about the MACD. Right now I have it in a histogram format. Okay, our moving average is in a histogram format, and then we have our signal line, right? That is here as well. That is also a moving average. These are two moving averages. Now, the way this works is, do you see when this green histogram dropped below the white? When this green histogram dropped below that white line, this is a indication of a change of direction, an indication of our moving averages crossing, okay? So as you see this cross and begins to create that black space behind it, blank space, the lower it dropped, this is all a signal that this is selling off, okay? It came back up and then it pushed back down, and this is also that same signal, okay? So you want to pay attention to where this crosses. Now, for many of us, we've changed this to a line chart. So we've clicked on the histogram and we changed it to a line chart so that we can see when these crosses take place. So this is a place where a sell is taking place. This is a place where a sell is taking place. This is a place for a buy. When it crosses up above the white line, this is a buy, okay? When it's crossing down, it's a sell. Now, the color is very convenient, right? The colors are convenient because there is something else that is very important about this, right? There's something called a zero line. And that zero line, I'm gonna draw a yellow line, this lets us know about the momentum and also the structure of the market, okay? The momentum and also the structure of the market. So what happens here is when we are below the zero line, we have bearish momentum. And the MACD4C is special because it will change the colors when it drops below the zero line, when it goes above the zero line, okay? Red is for below the zero line and green is for above the zero line. So our MACD is special. We don't have to exactly pay attention to actually is the moving average crossing. We will see it visually. We will see a color shift when there is a cross, okay? Green and red. Now, here's the thing. Again, when we have a sell, right, where we have it crossed down, this is a sell. However, if this cross down happens in green territory, this could mean that this could only be a pullback. We don't know. We are looking for it to break structure or change in momentum by switching over to the red side, okay? That is when we have a new shift in direction. So look right here. This whole time we're pretty much on the red side, right? We cross up, cross back down. But look right here. Once we crossed up, I'm gonna just highlight this right here. I don't even know what the price action looks like up top necessarily. Okay, I know we kind of glanced at it, but I'm willing to bet that when this happened right here, this was an extremely bullish move in the market, okay? It's an extremely bullish move in the market. Why am I saying that? Because what happened is the market was down here primarily, it was bearish, but then it crossed up, and every time it crossed back down, it never really crossed back into this red territory, right? We had a small thing right here, but that was really nothing. These are going to represent our pullbacks in the market. Let's look and see if we are correct. Look at this right here. Same area that we just diagrammed. And what did I tell you guys? I told you that this is a very bullish move, right? And then these are representing just pullbacks because they're not crossing back below the zero line. So again, what do we say? Optimal reversal strategy is designed to catch the major reversal. However, it's also designed to catch the continuation play. So where are we going to have some of the best opportunities in things like this, where we could see that these are just temporary pit stops for the continuation play that we can get in. Okay, hopefully all these things are coming together, excuse me, are coming together. Look at our vortex, right? Vortex is strong. My blue, I've set this up this way. You can make yours whatever you want. My blue represents my base pair on whatever chart I am on. My white represents, my gray represents my essentially quote pair. What am I saying? So base in this case is the pound, quote is the Canadian dollar. So I always know, no matter what chart I'm on, if this is a bullish or bearish market. Blue above white is going to be bullish. Blue below is going to be bearish. All right, very, very simple. I set that up. I think the default colors are blue and red. Okay, you can make yours whatever you want. I did mine to correspond with my candles. As you can see, my bullish candles are blue and my bearish candles are white. My bull candles, guys, going up are blue. White candles are going down. All right, so I just made that correspond with my candles. Again, everything is customizable. All right, so we're going to use our moving averages to help us, our currency strength to help us, and our MACD to help us. All these things coming together to give us what we call confluence and to really make up our optimal reversal strategy. Now, optimal reversal is not only just a strategy, and I say this every call, it is a system, okay? It is a way to figure out what's happening in the market at any given time, okay? It's a way of thinking about the market, thinking about what's going on. It is a system that we have, okay? A system. Now, what does the system consist of? It's always focused on what is the trend, all right? What direction is the market moving in, right? Where's the strength at, all right? Where's the strength and the momentum at, all right? Those are the pillars. So we can use these indicators that we have here to give us that confluence. That's what we're doing. At any given time, we can say, okay, you know what? I wonder what's happening with this market. Well, let's check some things out. All right, we come over here, we just got on a chart, so like, what's happening with the market? I just got off work, I'm trying to figure things out. Okay, we're looking like we're bearish. Yeah, I'm on my 4s below my 20. Okay, so the market is bearish, right? So I'm gonna be looking for potentially sell opportunities. What's happening with my currency strength? Wait, what? It's crossed down. Okay, so blue is under white. Yeah, I'm seeing bearish. MACD's crossed. I'm selling. Oh, not only in that, am I selling? I just crossed my 0 line. So there's a potential for a sell. Am I gonna jump in right now? I could, right? I could if I wanted to. What could I do? Right? I would need to look left and see if there's space and opportunity, which there is, right? Which there is. There's opportunities to drop lower, for sure. What else would I want to make sure? Well, I want to make sure I have my stop loss in the right place. Well, where's a place I could put my stop loss? Well, right here. Here's our 20 cross. Here's the high above that. You know, I could just put my stop loss here, right? I could be as lazy as that. Put my stop loss right here. And then I'm just going to enter, right? And just enter. Well, where am I going to go? Well, I need to have at least a 1-to-1. So I need to hope that I can travel at least 100 pips. So now I need to look for structure 100 pips lower. Well, this is only 40 pips down. There's a possibility I may run into this wall. Okay, so maybe I'm like, let me see if we break my wall, right? Let me see if we break my wall before I get in. You may say that, not a problem, right? I'm not trying to tell you guys to trade like this. I'm trying to show you guys that this is how the system works, right? The system is allowing for us to take advantage of some things. Look at this right here. Not only did we have, we had this low, we had this low, right? I can connect these last two lows. We also had a breakout of trend, okay? So we are below this, and the market technically could stay in this downward position, all right? We don't know, but I'm just trying to show you that if you were going to just use the system, you could use it to aim for territory or targets that are in line with the structure of the market, and also to filter in. Maybe you missed the trade and you're trying to see, can I still get in? Well, if everything's in your favor, possibly, right? We don't know. So we'll play it out. This thing may go up, retest, who knows? Missed our target and then hit it, right? So our stop loss is in the right place. Utilize the moving averages to put your stop loss into the right place, okay? Use that 20. We're gonna get into it, the official steps, but I'm just trying to show you guys if that stop loss is in the right place, if you have things that you're looking at. So not only, look right here, not only did we use our 420 to make that stop loss, we also observed where that MACD crossed at too. It crossed right here. So the high that was above that MACD cross is a great place to put the stop loss. Okay, the high that was above that MACD cross. Okay, Troy said boom, it hit. And how do you convert the MACD to lines? I don't know if you saw that, Fred, right here. You click on the settings or double click on the MACD, and then histogram. It's normally on histogram, you just change it to a line chart. And then I saw your other question. I'll get to that. All right. Price went to structure, correct, Troy. Price went to structure. But I just wanted to show you guys how the optimal reversal can actually filter. Some of you guys like to trade longer trades. That's totally fine. I'm going to show you guys how everything is scalable. Everything is scalable. All right. Okay. Now, let's go through the official 5 steps. Remember, we are trying to get in at the lowest, at the quickest place that we have an opportunity to get in. So we begin on these lower time frames, but again, I'm going to show you guys everything can be taken up and adapted to whatever trading style you have. So our step 1, and these are the steps that you want to be able to clearly communicate when you are teaching, okay? So let me recap. When we're teaching, you want to teach about the Elliott wave, right? The fact that the market is moving in Elliott wave format, and what we are looking to do, we're trying to catch the continuation or catch the continuation, catch the major reversal, okay? Those are 2 things. Explain the moving average and why we use it, okay? The why behind it, essentially, we're trying to trade with the trend, okay? So we're taking, you want to explain the periods on those, okay? Next, you want to explain the currency strength and why it matters, okay? Again, the currency strength and why it matters, right? So you're explaining the vortex or the CSA, right? Why it matters, and of course, for all these, you want to be able to talk about the period or length, right? You want to be able to tell the settings. And then lastly, the MACD, all right? And then where what's selling, right? What's buying, the moving average crosses, right? And then the momentum, which is the 0 line. That's all. And then from there, just go into the 5 steps, all right? So I'm going more detailed, which is fine, but also we want people when they're teaching to be able to at least explain the basics. Elliott wave, moving average, currency strength, MACD, selling, buying, and what the momentum looks like. And then now the 5 steps, all right? So that's the template, okay? That's the template for you guys. Now, let's talk about the 5 steps. Step number 1. Step number 1 is this. We are going to wait for a cross on the 5-minute, okay, on the 5-minute vortex. All right, we can set an alert. All right, so how do we set that alert? We go into here, right click on the vortex on one of the lines and go to add alert on vortex. They're not letting me do it in replay mode, so I'm gonna get out. So do this again, add alert. It should look like this. Now I have it on 100, so let me change our settings to where it should be. It should be at 7, it should be the period. Okay, now let's do this again. We're gonna add an alert. VI7 crossing VI7. So VI7, it should be a VI plus crossing VI7 with the VI plus minus. All right. We're gonna do once per bar. Now, here's the difference between once per bar and once per bar close. Once per bar is going to let you know when they are kissing, when they are touching, okay? Once per bar is gonna let you know when the vortex is actually touching. That's what it's gonna let you know. Okay, it's gonna let you know when there is a touch. But it doesn't mean that it's closing, okay? That's what we're looking at. We're looking to first see if it is just touching, because we want to be there for the close. Okay, we want that alert to tell us ahead of time, hey, there's going to be a potential close. It's important to know that because sometimes it'll touch and then it won't close. And you don't want to count that as a actual confirmation until the close. The close of the candle is key. So let that 5-minute period actually close, but allow that alert to let you know that there's a potential close happening. All right. So once per bar is for letting us know when it's there. You can notify yourself on the app. Use your same credentials for TradingView. You can download it on your phone, TradingView the app on your phone, and you'll get those notifications as a drop down on your phone as well. You can do a pop-up that'll pop up on your screen. And then also down here, you can play a sound. You can change the whatever you want, right? It could be more annoying, less annoying, right? Doesn't matter. And then right here, you can customize this, right? You can put whatever. Where are we on? GCAT. So we got GCAT 5-minute vortex, right? You can make it simpler, right? You could put time to get the money, whatever you want, right? It's up to you as long as you know what this means, all right? So we're going to wait for a 5-minute vortex cross, okay? We're going to wait for a 5-minute vortex cross. So I'm going to do like Cannon did. The notifications are available on the free as well. Good question. So we're going to wait for a 5-minute cross. All right, so right here is where we got our 5-minute cross. No, the notifications are available on TradingView free. However, there's a limit. So you have to do one at a time. You can't have multiple pairs that you're tracking. Let me show you guys this really quick. This is a great question. Come back out to TradingView. Actually, I'm gonna keep this page up and I'm just gonna create a new one. We're gonna come in over here. Just wanna show you guys the differences. Okay, so right here, we had a great question about what's available. So if you notice, there are different columns here: Pro, Pro Plus, Premium, and Basic. As I scroll down, right here are the columns. So we have Basic. right? Basic allows you to have one chart, one device, and one saved chart layout. As I scroll down though, it also lets you know that you can have 3 indicators on your chart. So I'm gonna show you something. If you have basic, we'll eliminate our 4 EMA, it's not a problem. And we'll keep the vortex, our moving average, 20 moving average, and then we'll keep the other thing. And then right here on alerts, you see, we can have 1 alert. All right, 1 alert for a free account. Okay, for the next step up, you can have 10. So you can set 10 different alerts. Next level up, you can set 30. And all these alerts only last for about 2 months. So all that means is you have to just restart it. So when an alert has been on for longer than 2 months, it will actually just pause itself. And so you just have to turn it back on. And it's a very easy step. You just press play. So that was a great question. We can have 1 on a free account, 10 on the next level up, 30 and 400. All right. So, and always remember TradingView has 30 days free, and also never, ever sign up just right away. Just wait for them to send you all the deals. They will try to sell you, even when you try to say goodbye, like after your year is up. If you wait, they will actually offer you the special again, special rate, right? Because they usually say it's for the first year, but what happens is they're going to take out that price, that discount at the end of the year. Well, if you say goodbye, I don't want to pay or whatever, they're going to take you through this whole little thing, and then they'll start offering you all types of different ways to stay in, even with the free trial. That's the other thing. If you sign up for the free trial and you don't want to finish your 30, and they're like, you're ready to, sorry, after your 30, you don't want to upgrade, they'll ask you a couple things, and sometimes they'll offer, you know, okay, well, we'll give you the alerts, right? We'll just give you the alerts for $5. You want the alerts for $5? You take that. It's pretty good. They are always closing. So back over here, everything starts, everything begins. We don't even care about the market until we have a vortex cross. This is why this is so important, right? Because the market is going to change directions based on this vortex cross, all right? What's happening? The pound is getting weak in this case, while our Canadian dollar is getting strong. So everything begins right here. Okay, everything begins right here. Now, once we get the cross, we move on to step number 2. And I'm just go ahead and put these rules in the chart as we go on, in the chat as we go on. So now we're on step number 2. And step number 2 is going to be that we drop down to the 1 minute to confirm the 420 cross. Why are we doing this? We definitely do not want to trade against the 1 minute time frame for our initial entry. It makes no sense to enter a sell right here, but our 4 is above the 20 on our 1 minute. Why is this? Because lower time frames help to create the bigger time frame, right? For every hour, there's 60 minutes, right? For every 15-minute candle, right? For every hour, there's 4 15-minute candles. There's 2 30-minute candles. So what's happening is we're building along, and you don't want to start off on the wrong foot. All right, so we want to be in the right direction. So as we drop down to this 1 minute, we want to make sure that our 4 is below the 20. Now, I told you guys, if you do not have a moving average, if you only have a basic package, what you can do is you can eliminate, okay, you can eliminate the 4 EMA. Why is this? Because the 4 is really just running through the candles, okay? So your question to yourself would be, are the candles, is price action below my 20, my blue. Okay, you see how I got rid of that, but I can see that my candles are below. Okay, I just imagine the 4 is running through the candles. All right, so right here, my candles are below. So we have a check on that. All right, now what we wanted to see is we wanted to see that there is the next step, number 3, is we wanted to see that we have a cross opposite direction on our MACD. Okay, we want to see our 1 minute cross happen opposite on our MACD. So what do I mean by this? Look right here. When the cross first happened, our MACD was going in the right direction, but then it crossed up opposite direction. We call this a retest. So it went up and then it came back down. When it comes back down, that is a good sign. That is step 3. You want to see it go opposite and then come back down. Okay, opposite and then come back down. So right here is where it came back down. All right, so now we have step 3 complete. Step 4, we are waiting, right? We want to see that our 5 minute MACD, has a cross and a 0 line cross. Okay, what are we looking for? We're looking for this MACD to cross, which it has, but we're also looking for it to change colors from green to red. We want to see that this thing comes down, and now we have it. Okay, now we have the cross. Now we could possibly enter this trade, but we have to verify one last thing. We need to verify, step number 4, we need to verify that the 15 minute is also crossed, because we don't want to go by ourselves. So we're looking right here. We do not have a 15 minute cross yet. What am I talking about for the cross? I'm saying this green line needs to cross over this white. That has not happened yet, but now it has. Okay, so we probably would have saw that cross being created. Now, here's the thing. Where does our stop loss go? We can enter this trade, but where does our stop loss go? It's going to go where the 4 crossed the 20, right, which would have been right here, where this 4 crossed the 20 and above the high. That's all you got to do, where the 4 crossed the 20 and below the high. Now, we're going to make that red. We can now enter this trade based upon us now having all of our confirmations. All right, remember, stop loss above the 420 cross, where these moving average cross, and the high. How do I know this is a high? Or I can change it to a line chart. The highs are going to be the peaks. The lows are going to be the valleys, right? Where you see the V's at. So stop loss above that and probably above the wicks of those candles. If you're really trying to be safe, put it up there. Okay? If you're really trying to be safe, put it up there. But we can go here. In some cases, we can get away with this. Right above this guy right here. Okay? So we had high, low, high, low, high, low. Okay? Looking at the market structure, we're just making lower highs. So this was our last high that was above, right below, put it above the moving average, above the last high. All right? So here or here, right? We're gonna put them in all 3 places for this example. All right, because we want to see what was produced. Now, we're gonna play this out. We have the option to get out of a trade based upon the 5 minute MACD. So our exit, last step number 5, our exit is going to be when we get an opposing MACD cross. All right, our exit is going to be when we get an opposing MACD cross on the 5 minute or 15 minute. Okay. Now, take a look at something. what kind of cross was this 420? Was this a 420 cross that was above or below this 200 MA that we just added in real quick? This one is crossing below, right? So is there a potential that this could be a longer term play? There is a potential. Now, the last time it did it, it didn't go. But the last time it did it, it probably did not have a 15-minute MACD cross as well. Okay. Now we have this 15-minute MACD cross on our side, and we have something even more special. We have a zero line break. So let's think about, what do we know about our zero line break? Our zero line break is a momentum shifter. And notice what's also happening here. We're also shifting below that moving average. This may be a long-term play, okay? It possibly can be. Now, our exit is our 5-minute moving average or our 15. So as we play this out, what we're looking for is we're looking for our moving average down here to cross back up, okay? Here's our cross. So if we waited for the cross, you know, we're talking about 57, 56 pips. Okay, stop loss was about 79, so we haven't even covered our 1-to-1. But we did break, we went to structure, okay? Now, this is a longer term play, potentially. Let's continue to think about the space we're in. Look at this 15-minute. Is a 15-minute cross yet? No. Let's look down here and see, do we have any other confirmations? No. And actually, what's taking place is we have a bunch of equal lows. So this is where you have to make your decision, right? Am I going to hold, or am I going to actually just aim for some of these shorter term targets? All right, there's a potential that we can break through here, but we don't know. So this is where you have the freedom to really just think about what are my goals here and what can happen. So we never broke up. I mean, we never broke down. Play this out, see what happens. All right, market stop, nope. Okay, so let me pause it. We did break down, but let's look left. Let's look to see if there was some structure over here that it was shown that we could get to. Nothing close. I have to go way back to find it. All right, so yeah, here was more structure here, and here was more structure right here. All right, so we had a couple places that we could go to long term, but notice how that 200, right, that 200 moving average is allowing for us to see that there was a bigger shift that just happened than just a small move. And also notice how when we would have lost our confirmation, let's see where the 15-minute crossed up. We wouldn't have, yeah, so we would have lost our 15-minute up in here as well. But here's what I want you guys to start paying attention to. The 15-minute crossed back up, but did it break our zero line? No. So these are going to be those opportunities where we can catch continuation moves. What do I mean by breaking the zero line? The red line right here never turned into a green line. It never went back upstairs. So I want you guys to start being able to spot and look at what continuations look like inside of the MACD, okay? It went up, this is just a pullback, and that's exactly what we got. So we hit that first level up here with the price action. So we broke, and what's the classic play? The classic play is there's a retest. So all we did was have that retest twice. But notice how our stop loss kept us out of trouble. We went back to break even if you held it. right? Some people take profit, right? If you got back in one more time at the levels, everything remained, you're good. What's another reason this thing would have been a good opportunity to get back in here? Someone let me know what would have been a good reason that you guys could see with the price action for us to get in at this level for a third entry.
The crossover.
Yeah, the crossover, but there's something else that's more important. We're about to get into that in a second.
Are you looking at the next candlestick to the right of where your cursor is right now? How it's more bearish right there?
Well, bearish closing candles or, candles closing lower, that's important too.
The candle to the left,
What's that?
the bearish engulfing candle to the left.
This guy right here,
Oh,
okay? This bearish engulfing candle to the left created what kind of zone, Delisha?
Supply zone.
Supply zone, okay? Supply zone. So we have officially went through the 5 steps, but I'm about to dig into again where we should be looking for these opportunities. Okay.
hey, does it matter that engulfing candle is 4 candlesticks away? That is not like immediate to the momentum, the drop that had the most momentum. Does it matter like what the time frame is, what the range is?
When you say 4 candles away, like it's like these candles are away from this?
Yeah, so like the candlestick I was pointing out, what she pointed out was it was 4 candles to the left, the engulfing candle. Does it matter that there's so much space between?
Well, no, but the space is actually going to be usually the norm.
Okay.
Here's what's happening in these areas, and we're going to talk about this. All right. We have now completed our 5 steps. All right. Those are our 5 steps. It is not hard. I'm going to paste it in the chat one more time with these 5 steps. Okay. These 5 steps, I'll paste them all the way whole. These are what you want to save. This is exactly what you want to write down in your notes. All right. So when you're teaching, these are the steps. When you're trading, these are the steps. Okay. So those are the 5 steps. Now, this is a system. Okay. So, and it's also scalable. For some people, the 5-minute is too noisy. So when I say it's scalable, I'm saying, here's what you could do. You could say, you know what, Chuck, thank you for the great strategy, but man, I can't deal with those 1-minute and 5-minute candles. All right, great. Take the strategy, and instead of waiting for the cross on the 5-minute, let's switch it up and let's wait for a cross on the 15-minute. Okay, so you would get a cross right here. This is where you would start everything off. You would wait for that 15-minute cross. Okay, so here's a 15-minute. You're going to have less opportunities, but you're going to have longer distance opportunities. All right, so you have a 15-minute cross right here. What is the next step? You drop down to the 1-minute. Okay, we're not going to drop down to the 1-minute. We are going to drop down to the 5-minute now because we took everything up a step. Okay, we took everything up a step. So we're going to drop down to the 5-minute. And what do we need to make sure? The 4 is below the 20. Is our white below our 20? Yep, white is below the 20. All right, what are we going to wait for now? On the 1-minute, in this case, on the 5-minute MACD, wait for the retest. What does that mean? That means let this thing that is going in the correct direction, let it go in the wrong direction. Okay, so wait for it to go into the wrong direction. So here is the right direction. Here's the cross up for the wrong direction. And what are we going to do? We're going to wait for it to come into the right direction. Still don't have it yet. Still don't have it yet. Still don't have it yet. Still in the wrong direction. Crossed up. And now we have the wrong direction. Okay? We have the wrong direction. Now, We finally got the wrong direction right here. Okay. So now what are we going to do? We need to have, we said 15-minute must have a confirmed, step 4, 5-minute MACD must have a confirming cross. We're taking everything up a step. So that means the 15-minute must have a confirming cross. We have it. But we also must have a zero line break. We also have that. What do we also say? That means the 30-minute must also be on a sell as well. And you can see that our 30-minute MACD is on a sell. If all those things are in place, we can enter the trade, okay? We can enter the trade. Where does our stop loss go? Our stop loss goes above the high, right? Above the high of the 15-minute time frame cross, which is right here. Or you could put it right here. All right, either or, all the way up here or here, because this was essentially just a pullback. You can see retest came down. All right, so the idea behind this is if the market breaks back above this high, then it could potentially go up to another level. So that's where we're comfortable with our stop loss being above there. What also is this? This is a supply zone. So if the market goes into this, comes back up, and breaks this, then it violates this whole supply zone. We're going to get back in more to supply in a second. But now we're trading, right? And you see that we are pretty much making that money, okay? You can stay in the trade until you get a 15-minute cross. If you want, aim for your targets, right? Remember, the higher you go on your time frames, the slower that moving average is going to be. So you're going to surrender a lot more pips. However, you know, that was a 200 pip pullback. I don't know if you would have been able to handle that emotionally. But let's look at this. Our entry on the option reversal, whether we got in late with the higher time frame or earlier, it generated, we had a stop loss that was about, I think we called it 70 pips, that ended up being a 400 pip move, okay? That's the type of returns that you can get with this strategy because it allows for us to have stop losses that are tight, okay? Now I know 70 pips doesn't sound like it's tight, but let's just talk about this for a second. If I had an account size of $1,000, okay? Let's just say $100. If I had a stop loss of $100, and I had a stop loss, that was 70 pips, okay? I'm trying to risk no more than 1 to 3%. So could I take this trade? No, not really, without being over leveraged. Okay, it's too big for my account size. If I had a $200 account, right, 1 to 3% is going to be $2 to $6. Could I take this trade? Possibly, but I'd still be a little bit over leveraged, okay? If I had a $300 account, 1 to 3% risk would be $3 to $9. Could I take this trade? Sure, okay? But check this out. You can take it off of the $100 account because usually if you're taking a $100 account, you are you're really trying to you're starting with smaller amounts for either that's where you're at, or also you're really just trying to test the waters out in a live market. We call it like demo, like live demo trading in a sense, like money to blessings, Nehemiah, money to essentially really be live with, so you have really motion when you lose, but nothing that's usually gonna hurt your family or hurt your family. Okay, so here we go. 70 pip stop loss. All right, what are we doing? We're going over to our position size calculator. All right, some of you guys have what's called the PZ trade pad. You can use that as well. $300 account size. Let's say we risk 3% and we are trading pound CAD. Our stop loss is 70 pips. Okay, it's advising us to trade with a 0.1. All right, almost a 0.2. All right, I always talk about this. If you have an 8 or 9, you can round up, or you can keep it there. All right. In this case, we'll round up. All right. So in this case, we'll round up. So we're going to use a 0.02. Now, if we lose this trade, we're going to lose a little around $9, $10. Okay. But as this thing goes down, this is the profitability of this. You're talking about something that played out to be about 440 pips. So now we take that we're going to measure, we're going to take 20 cents a pip times 440. It's about 88 bucks. Okay. We need to take off a little bit of that because this is pound CAD. Give me 1 second. Deirdre, do you know what the conversion would be on this? Let me see.
The conversion for the US dollar to CAD? Or for the dollar amount of the money?
Yeah.
No, I don't know that offhand. I don't. I don't know.
Give me 1 second to think about this. We have $1,000 account size. I'll do 1% risk.
So I think it's saying that the one Canadian dollar is worth $1.43. I'm sorry, one US dollar might be worth $1.43 Canadian dollars. I'm not sure.
I think that's what's happening. So 10. Let's just not stress over it. Let's just give this basic example, right? We had 88 bucks, right, made on a $300 account. We'll divide that by the 300 and we'll multiply that by 100, right? That's about a 29% growth, okay, on the account based upon just this one trade. Now, it would have took us about 5 hours to stay in the trade, maybe less with the first hit. But my point is this is a profitable strategy, right? You guys aren't waking up and getting on the call, whether you're on the East Coast or West Coast at 8 o'clock in the morning for just entertainment's sake, right? We're here to make money. And this works if we're patient, okay? It works if we're patient. Now, let's talk about supply. Let's talk about demand. Before I move on from the steps, are there any questions? And then also, how do you guys feel about looking at the higher time frame vortex and incorporating the higher time frame moving average to help give you some guidance?
Well, you know, I like those higher time frames, Chuck. It also allows me to get more pips in the trade. However, I now have more desire to look at the short term for the entries. So the short term entries are great, but it's good to have a higher time outlook because it allows me to stay in those trades longer. And that's more of a match to my psychology. One of the things you'll come to find out is that you have to get to a point where you learn what type of trader you are. And so for me, the balance of both is great. I know that there's a lot of scalpers on here. Chuck is a true scalper, although he has a breadth of ability to adjust to higher time frames, day trading, intraday trading, swing trading. But I know he likes the 1 minute chart, where that's not my natural personality. However, I do recognize the value of understanding how to identify entries on a smaller time frame. And then I'm able to, once I'm comfortably in the trade and I have my exit rules, switch to a higher time frame or be aware of the higher time frame or where my market structure is, and of course price action, so I can maximize those opportunities based on my trading psychology to get more pips out of that trade.
Mm-hmm. Yep, thanks for that, Troy. Any other comments or questions? Comments or questions? All right, let's talk about this, because I think this is going to be very, 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 very helpful. Okay. For the last few weeks and the rest of my life, right, I'm going to be echoing the same thing, right, on these charts, okay? The market is not doing anything new, okay? Not necessarily. The market does the same thing every single day, but differently. The market does the same thing every single day, but differently, okay? That's an important statement, but it's important that we understand it. It is not necessarily coming up with new tricks. It's not coming up with new tricks. Now, you may see something, price may be in an area that's never been before. You may not see any support or resistance in that area, right? But it's still the same market. The market's just moving in impulses and corrections, just like life, right? The market is connected to life. It's us. The market is a reflection, a manifestation of us. It's just us on the charts, right? It's us buying and selling. It's people, okay? And so we are going to display patterns, consistency. We're going to do same things at the same levels. We're going to see a herd mentality, right? You're going to see a lot of those different things played out in the market because it's really just us. Now, we talk about this Elliott wave structure, okay? We talk about this Elliott wave structure. What are we talking about? You have impulses and corrections, impulses and corrections. I don't have the time, nor do I feel like teaching Wyckoff on this call. But if you want to study, look up Wyckoff, okay? Wyckoff theory, okay? Look it up, and it's going to really help you understand a lot of these concepts, all right? Why these different things are happening at these areas, okay? However, it's just, even if you don't understand all the theory behind it, this is just what's happening over and over and over again. The market will move in a direction and stop, pull back, move in a direction, stop and pull back, move in a direction, stop and pull back. It always has this impulse and correction, all right? What we want to train ourselves to do is to utilize this to our advantage, this impulse and correction behavior. And I told you guys that when we see an impulse and we begin to see a pullback, there are a couple things that we want to do. First thing, we see an impulsive move, and then we begin to see a pullback. What do we want to do? We want to grab our fib retracement tool. So here's our fib retracement tool. How do you draw the fibs? You always start from the point of origin of the impulse to the end of the impulse, okay? And it's always going to be left to right, left to right. If it was a down impulse, you're starting at the left, you're going to fib all the way down to the right, left to right, right? You're measuring that. Now, my fibs, if you want these levels, write them down. Take a screenshot. We have the 0, 236, 38.2, 50%, 61.8, 78.6, and the 100. We also have the 88.6 and the 83.5. Okay? It does not matter where they're at typed in. I could put my 0 right here, right? It doesn't matter. It just matters that you have those on there, okay? That's what matters. Now, I also have mine color coded, okay? My 61.8 and my 50% are yellow. And my 78.6 is like a pinkish, rubyish color, okay? Now, here's what's happening. I have two zones. I have two zones that we are looking at, two zones. There's one zone which is called the gold zone. That's why I have it marked off as yellow. So I got this one zone right here called the gold zone, okay? And I have this zone right here that's called the ruby zone. All right, my ruby zone. My ruby zone is essentially a supply and demand area. We're gonna focus on that supply and demand. The gold is a normal type of trend. Now, let me see if I got the picture here. I had it last week to show you guys. I should still have it. Let's look. If I don't, I'll grab it real quick. All right, let's look at this real quick. Over here. I want you guys to see this image right here. Give me 1 second. I want you guys to see this image right here. Check this out. Okay, whenever we have this impulsive move, okay, we have this impulsive move like we have right here. Market went up, okay, impulsively up. What we are trying to judge is the strength of that trend, the result of what takes place. So when the market pushed down up, we're trying to now see on this retracement where it's going to stop. Is it going to stop at our 23.38% level? Is it going to stop at the 50%? Is it going to stop at a 61.8? Is it going to come back down into our supply demand area? Or is it going to be 100% or even more, go past it? Okay, we're judging the strength of the trend. That's what we're trying to do, judge the strength of the trend. So we get that impulsive move, and then when it comes down, we are looking to see if this is going to be a continuation off of these levels. Okay, think about the Elliott wave, impulse correction, impulse correction. This is why the fib matters. All right, now when we have what's called a 50% 61.8 retracement, we are dealing with normal type of activity. Market is just really just doing business as usual. Nothing special here to watch. Money to be made, but nothing is happening abnormally. Okay. However, when we start to have these shallow retracements, where it comes down to like the 38.2 or 23.6, right? These are very shallow retracements, means that this is a very aggressive trend. Okay, very aggressive. Now, a lot of times in the middle of consolidation, what you will have is you will have it move down to a supply or demand level, and you'll see it flow into like our 78.6 or 61.8 territory, okay? For those that don't know where that is, that's going to be right around here, okay? Right around here, we're gonna be in that ruby zone, that 786, right? And that 88.6 level, all right? That's what we're looking for. In consolidation, you will see that it will land in our ruby zone, all right? But this, more importantly, is a supply or a demand zone. For a retracement like this is a demand zone. If this was flipped around, it would be a buy zone. Let's come back over to our other chart. Let me show you this real quick. So as we come over to the other chart, we are looking for these retracements to take place. Okay, we're looking for these retracements to take place. Let's come over here. Now, I want us to zoom in. We introduced the 200 MA, all right? It's not officially a part of the strategy, but it can help us, right? It can help us. What I want you to see is, I want you to see here where the market made this impulsive move down like this, okay? We made this impulsive move down like this. Once we get an impulsive move, look right here. 4 and the 20 crossed our 200. 4 and the 20 crossed our 200. Okay, you see this? What is this letting us know? Look, 4 and 20 crossed right here, but it was above our 200. 4 and 20 crossed down right here, but it's above our 200. 4 and 20 crossed down right here, but it's above our 200. This one actually crossed below our 200. This is letting us know that this may actually be a serious change of direction. There's a potential, and we want to see what takes place. So when that 420 cross, what I could do here is I could come in here and I could say, you know what? I got that 420 cross. I'm curious, that 420 cross below my moving average. I'm curious, as this thing pulls back, is there going to be a continuation? Are we going to stay on this downward direction? So what I could do is I could take the impulsive move down to the end of that move. And what I'm trying to do is I'm trying to track the correction. I'm trying to see, am I going to get a response off of my gold or my ruby levels? Okay, off of my gold or my ruby levels. Estella, did you have a question?
Oh, shoot. No, sorry.
So what happens is, as we pull back, I need to start paying attention to these fib levels, where they are at, and also need to start paying attention to these supply and demand zones that are created from engulfing candles, okay? When you see an engulfing candle like this, what is an engulfing candle? We are basically comparing the two candles to each other, the body of the candle. So this body right here engulfed this, but this not only engulfed this, it engulfed that. It actually took away every single thing that these buyers just did. It took all that away in one candle. Now we are concerned about the candle directly to the left of it, but we have to acknowledge how strong of an engulfing candle this was. What is that letting us know? That is letting us know that there was a lot of buying volume, okay? Buying volume in this area. Remember I told you guys, we are the shrimp in the waters, but we want to be trading in line with the big blue whale. We want to be moving with the whales, and we want to be moving with them. We don't want to trade against them. We want to trade with them. So how do we trade with them? Well, we trade with the trend, but we also figure out where there are supply and demand areas, okay? Supply and demand, because the engulfing candle is the fingerprint. The engulfing candle is the fingerprint that they leave on the market. That engulfing candle is the fingerprint. So when I have a candle, right, that engulfs the previous candle, I had this bull candle and then the bears are like, nope. This is their fingerprint. Start paying attention to their fingerprint. Their fingerprint will lead you to the money. What is this saying right here? That in this area right here, there is a lot of buying taking place or selling taking place. And what you want to do is you want to look left and you want to box up the body of the previous candle. And this zone right here becomes a supply zone. Okay, this becomes a supply zone. On the flip side, if I had a bullish candle, a bearish candle, right? And then I had a bullish candle, what just happened here? Well, what happened right here is that I ended up having essentially a demand zone created. And what are we going to do? We're going to box up the previous level, the previous candle's body. Okay, the body matters. Now, the wicks matter too, but the body is the zone. The body is the zone. Why? Because the body is where the candles are closing. Okay, the body is where the candles are closing. And so, as we take this trade, as we look, we're looking for the market to revisit. So what happened is there was a lot of buying that took place, and it happened very rapidly. Okay, it happened very, very rapidly. And there was probably some people that wanted to buy at that price, but didn't get the opportunity. So what happens is the market's going to come back to the area, say hello, and then take off again. Or the market's going to go up, come back to demand, and take off again. Okay, that's what we're looking at. Demand zones and supply zones. A lot of supply, there's a lot to sell. A lot of demand, there's a lot of people are trying to buy. Think about it like that. Got a lot of demand for it. A lot of people are trying to buy it. I have a ton of supply. I have a lot to sell to people. All right, just think of it like that. Troy likes to say, think of supply and sell, because they both have an S. All right, however you think about it, just think supply zones are for selling because I have a lot of stuff I could sell. Demand zones are for buying because I have a lot of people trying to buy what I have, a lot of demand. Got it? All right, engulfing candle. So as we come and look at this, check this out. Check this out right here. This is that key zone that I need to pay attention to. There's money in this area. But look right here also. You guys see this bearish engulfing candle. There's money. So this whole zone from here to here, there's money. Look at this guy. Another bearish engulfing candle. Okay. There's a lot of money in this area. And what else was happening over here? You see this bullish engulfing candle? This got overtaken, right? We broke through that level, retested, and we came down. So we have now broken through a demand zone, and now we are in supply territory. We're in an area where the market could stop and turn around. And what are we paying attention to? We're paying attention to the fact that we're below this 200. We have a 420 cross, but we're still below this 200. This could mean nothing, or it can mean something. We don't know, but we have our fibs here to give us some guidance. Our Ruby zone, if it gets all the way back up there, fine. Let's get the money, take the trade. If it stops in our territory down here, then we're going to take the trade. Now, what just happened? We entered into our supply zone. You guys see that right there? Market entered into our supply zone, and look how it struggled to close. Look how it struggled to close, okay, above the zone. It hit here, and then it hit here. It struggled to get up above that zone, okay? That's going to be a key. Just pay attention. Now, it could go up, but just always pay attention to the environment around. Start looking at stuff like that. Did the market really change structure, or did it just do a fake out? And now what is it also doing? It's giving us a little bit of wick action on the bottom to give us the opportunity to now draw this trend line and see if there's a structural change here. Okay, now here we go as we play this out again. Now we're breaking our trend line. One more retest. You see that little baby engulfing candle right there? We are still creating supply zones. Got one here and here. Nothing but supply is happening. Supply zones left and right. All right. So what happened? This supply zone right here produced this sell-off. Okay. This supply zone produced this sell-off. So we closed outside the zone and then dropped for, drops for about 56 pips. Not bad. That's how strong that level was. But now what's happening? We created a low, high, low. It's trying to create a higher high. Okay? Now, this happens all the time, especially with G pairs. Okay? All of the time. G pairs like to break and retest high. Okay? Break our structure and retest high. So as we play this out, look what it did. It broke up and it retested our trend line high. Where are we at? We're in our gold zone. We like our gold zone. Gold zone is key. And notice how we came out of the zone and then fell down, okay? So these are things you want to pay attention to. Notice how it hit our gold zone. Notice how it crossed up on the 420, but it stayed below that 200, okay? Letting us know we're still creating. There's a high, there's a lower high, there's a lower high. You guys see it? It's just pushing down. And you can see how it's in line with our moving average. Okay, another opportunity there again, let me show you. So we had a hit off of that gold zone, and I just want to show you how fractal this thing can be. How it can just be broken down level by level. Right here, we had impulsive move down. What are we starting to have? That retracement. What are we going to do? We're going to draw our fibs. And look what happened. Nothing special, just business as usual. Okay, we're hitting our gold zone. It's just what the market does. It impulses, it corrects. It impulses, it corrects. Right? Just keeps on doing the same thing over and over. Okay? So by utilizing, right, and what would we use? We would use optimal reversal to qualify these entries, right? We would use optimal reversal to qualify these continuation entries. So I get asked the question all the time, right? What are we doing? We don't know where it's going to stop. You're correct. So we wait for it to get in our territory, and then look for our confirmation. So look right here. I'm going to back this up to around here. Okay, let's take this back. I'm going to take it back, and let's look at the optimal reversal system. What do we need to take a trade? We need our vortex, okay? We need our vortex cross. Nothing happens until we get a vortex cross. Here's our first vortex cross on the 5 minute. Perfect. What else do we need to see? We need to also see that our 4 is below our 20. All right, let's check it out. Boom, our 4 is now below our 20. All right, we're good. 4 crossed below the 20. What else are we looking for? Looking for our 5-minute MACD. Now, we have what's called optimal reversal aggressive, okay? Optimal reversal aggressive. Optimal reversal aggressive. But the only way to use optimal reversal aggressive is in this type of scenario, and let me give it to you. Optimal reversal aggressive requires. If you guys are at church with me, I'll tell you to look to your neighbor and tell them requires, right? Optimal reversal requires a Fibonacci level. It requires a Fibonacci level. It needs to be our gold or our ruby zone. Gold or our ruby zones. Okay, it must be a Fibonacci level, gold or ruby. Next, it must also have divergence. What is divergence? Well, there are 3 types of divergence. I need to put this up now too. Divergence. There are 3 types of divergence that you want to pay attention to. Okay, 3 types. Let's look at this a little closer. There's what's called regular divergence. And what regular divergence has is this top blue area represents price action. In other words, this is the candles. And what's happening with regular divergence is you have a low, you got this high, you got this low. What you really have, you're paying attention to the higher highs. So your price action is creating higher highs in this first example. However, in your oscillator, in our case, our MACD, it is creating, here's a high, and then here's a high, but these are lower highs, all right? It's lower than the previous high. So you have higher high, but the lower highs right here. They're going in opposite directions. Okay, same thing applies. You have a low and a lower low, but in the oscillator, you have a low and a higher low. Okay? That's for regular divergence. Hidden divergence is where you have the oscillator price action dropping down. So high, lower high, but oscillator is increasing. So you have a high and a higher high, and vice versa. Low, higher low, low, lower low. And then lastly, what we have is something that happens a lot that people miss. They don't see it as divergence. You have equal highs, equal lows, but pay attention to the MACD. Equal high, equal lows, but pay attention to the MACD because the MACD is showing you something different, okay? Remember that exaggerated divergence and take a look at this. We need to have divergence, okay? We need to have divergence, some type of it, and then we need to have the Fibonacci level. If we have that, we still must have a 5-minute vortex cross. We still must have a 5-minute vortex cross. But what we can do is, instead of having a 5-minute MACD break, 5-minute MACD break, right? We just need to have a 5-minute MACD cross, the MA cross, not the break. but we must also have a 1 minute cross must have break. So here's what I mean. We need that 1 minute MACD MA cross, but we must also have that 0 line break. That 0 line break. So let's come over here and I'll show you. Let's first talk about the divergence. You guys see this right here? Do you see how we basically have these equal highs? So we have the market came up to here and here. But look, this is somewhat of an equal high. Look at what is happening in our oscillator. We had all that momentum up. So here's the regular divergence. This is an example of it. You have a low followed by a higher, sorry, a high followed by a higher high. High followed by a higher high. But then right here in our MACD, we have a high followed by a lower high. That was our first sign of divergence. And then from there, the market created two highs that were basically the same, but down here created lower highs in our oscillator. That is a major sign of divergence. And where is it happening? In our gold zone. Nehemiah, you raised your hand. Did you have a question? This is essentially, right? This is essentially an opportunity for us. So what do we need? We would need to have a minimum, as we said, a 5-minute vortex. Boom, vortex cross. What do we need to have? A 5-minute MACD, boom, cross. And then what else do we need to have? A 0 line break. If that is the case, then you can take this trade on the 0 line break. So let's see what happened on the break. The break happened right here. This is for optimal reversal aggressive. So aggressively, we could enter this trade right here with our stop loss above the 420 cross there. And make sure you're outside of the gold or the ruby zone. You want to be above the gold or the ruby. Okay, so this can allow for us to get in at some of these earlier places, these entries that we really like, but then at the same time, be protected by our fib level. We're protected by our fib level. So now we're in this trade and we'll just see what takes place. Okay. A lot of consolidation and then it starts to move. All right, so this is a way for us to get a very, 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 very incredible entry utilizing our fib, utilizing our supply and demand, and utilizing really this whole idea of optimal reversal aggressive to get into this trade earlier. So you can see that was like 0 drawdown. And this thing went, I can't see it, 171 pips with a stop loss of about 30 pips. Okay, that's optimal reversal aggressive. Again, it requires that we have a Fibonacci level, our gold or ruby zone. It must have divergence. And then we must have the 5-minute vortex, the 5-minute MACD. It does not have to break. And it does, and then we have a 1 minute must have a 0 line break. That is it. Once that happens, go ahead, put the stop loss above, below the gold or ruby zone. Okay, that's it. That is it. All right, that's it. That's what we need in our life right there for optimal reversal aggressive. Now, just remember, you pay attention to what direction the impulsive goes. Impulsive move goes up, then you want to fib from top to bottom. You're looking for market to buy. You're buying. Why are you buying? Because this was a bullish impulsive move. You're buying off of the gold zone, which is your 50 to 61.8, and you're buying off of the ruby, which is your 78.6, 88.6. Okay, now let's just say you are a just regular naked trader, right? You're not using our confirmations to get in with these precise entries. Just rule of thumb would be this: if you take a trade off the gold zone, right, your stop loss is going to be the 88.3, okay? The 83.5, sorry. 83.5. All right, stop loss is the 83.5. What do I mean? Right here in my fib is this orange line. So if I take a trade to buy off of this level, I need to put my stop loss below my 83.5. Okay, that's what I'm saying, right? So you're getting in here with your stop loss down there. If we are going to take a trade off of our ruby zone down here, our stop loss is the 100%, okay? It's the 100, and so we take a trade off of here for the buy, then our stop loss needs to go right below the 100, okay? That's it. Now, what's pretty cool is you get that ruby zone hit, you have a very, like, the risk reward is really in your favor. Because if that thing comes all the way up to here, I mean, you're talking about 130 pips versus a stop loss of about 20, okay? If you take it off of the gold zone, you're talking about a take profit of about 90 pips with a stop loss of about 37, 38 pips. So the risk to reward is much greater when you take it off the ruby, but the gold is still great too. Okay, any questions before I move on to Underground Railroad? How you guys feeling about that? You guys like that? Give me some feedback. Give me a break from talking real quick.
Man, Chuck, I don't know how you do it, brother. You are giving a lot of great information. I hope people are taking copious notes. I know Madison loves that word. Not really. But I'm hoping that you guys are really grasping the concepts, if not the specifics of it. You know, we have a saying, most things are caught, not taught. So repetition is going to help you review this over and over and over again, and your comprehension will increase. But I'm just letting you know you're getting a lot of great information explained in a very simplified way. Just absorb it as much as you can over time. Like I said, you'll get more and more. But you're getting a lot of great information and a lot of great teaching. So if you feel overwhelmed, it's natural. But just take your time and know that over time you will get it, you will comprehend it. And more importantly, you know, go to the charts, get on your trading view and start looking at this so that you can see what he's teaching in the charts. That's going to help you increase your comprehension as well. But Chuck, man, you're doing an outstanding job, man. You're giving a lot of great information in a condensed period of time. The teaching is very effective. I learned something new every time that you teach, or it reinforces what I know, which is increasing my confidence. And as a trader, that is everything. So just great job, man. Keep it up. And thank you so much for what you're doing this morning.
Thanks, Troy. Thanks. I will get the recordings out. Put your send me your email, and I'll get it to you. Okay. The last thing I want to do about with this supply and demand zone is I want us to understand. I said earlier that when we're in consolidation, a lot of times it will bounce off our Ruby zone. Look at this right here. You see the consolidated market. Market came down, pushed back up. Where did it go? To our Ruby zone. Okay. So this is happening all of the time. In consolidation, you're going to see a lot of Ruby zone. Okay. It's the same way, like both directions. Like that way, we had to push down, so we fit that foot. On the push up, look what also happened. It bounced off of our Ruby zone. We're in consolidation, right? You're gonna see this pattern happen in consolidation. Happens all the time. Okay, so those Ruby zones are special. Those Ruby zones are special. Start to pay attention to them, and they're going to really, really help us. Okay, and then also sometimes we don't really know where to draw the fib. So I always tell people, let me remove this. You could utilize the MACD if you want to help show you where I should draw my fib. So, for instance, look right here. Let's do it like this. We'll keep it here. You see the green area right here? So we have the highest point of that green area, right? And then what essentially you have is the lowest point. This is not the highest, actually. Got to pay attention to closes. This is the highest. And then the lowest point of that red area. So we're going from green to red, okay? Adjust for the wicks, and there you go. You see how we use this green territory right here, and then the red area where we crossed up to draw this fib. So here's the retracement, and then here it is again. Same thing right here. We have the green, highest point in the green, right here, right? Lowest point in the red. We're out of the red, okay, cool. So we're gonna go from here to here. And what are we doing? Same thing, rinse and repeat. We're looking for trades off our gold and our ruby. We didn't get up to the ruby, but we got up to the gold. You guys see that? So this doesn't have to be complicated, because a lot of people are like, I don't know where to draw my fibs. Look at your MACD. Let your MACD assist you, okay? Let the MACD assist you. I'll do one last one. We have the green right here. With the push down, we have all this red. Lowest point in the red would be here, okay? That would be the lowest point. So we're gonna go ahead and fit this. And then rinse and repeat, okay? Rinse and repeat. You guys see that over and over and over again. And then we just look for our confirmations off those levels. Okay. Notice if I zoom in right here, starting to consolidate, what we're gonna do, we're gonna start to look at those areas and look at the, you guys see that right there? Look at that. Here's the high, higher high. Here's the high, and the MACD, lower high. Divergence. Divergence at a fib level. Take the trade. Why do we care about divergence? Divergence lets us know that the market is exhausted. It's showing exhaustion in that direction. Okay? Market's tired of going in the direction that it was going. Yeah, those fib levels are crazy. Over and over and over again. I'm telling you guys, just practice. Come on the charts and start looking for the MACDs, right? Look at the MACDs. Just do it over and over and over again, and it's going to really just help you. Here's that high again, lowest points, the low, right there, and last one. It's like all day, every day. Market is not doing anything new. It's doing the same thing but differently. Okay, same thing but differently. Underground Railroad.
Chuck, this is Terry.
Hey, Terry.
Good morning.
Good morning.
I had a question about the fib retracement. Can you hear me?
Yes, ma'am.
So are you saying that when it retraces to the 50 and the 78, which is your gold and ruby zone, were you speaking of the continuation? Is that the continuation move after that?
100%. So you're talking about optimal reversal being used to catch the original reversal, but also to be able to catch the continuation after the pullback. So we're looking for the market to hit off our zones to be able to get the continuation play. Right?
And
think about the Elliott wave. Impulse, correction, impulse.
And so
That's exactly what we're doing. What are you going to say?
The deeper the retracement, which you say the ruby zone is the deepest, the bigger the continuation.
So let me explain like this. So if we have the impulsive move, right, and then we have a pullback that's this far down, right? That's 100%. That what we're measuring is the strength of this guy, how strong this guy was. So that's really what we call a deep retracement. There's not a lot of strength in that uptrend. We haven't identified that there's a lot of strength. However, if we do this, right, or if we break out, or let's say we do something like this, where now that last time it only pulled back about 50% to probably our gold zone. Now we're starting to see some strength in the market. So it's about really being able to use our fib levels to let us know how aggressive these trends are. If this thing came to like 38.2 or 23.6, this is a really shallow retracement, which means you're gonna have a pretty aggressive trend. Now, I didn't talk about targets, but we can also use our fibs to do the targets. But before I go into that, I just want you to, did that make sense? That we're trying to measure the strength of this. Like, how excited should we get about this impulsive move? Because if it stops all the way down here, then it's like, okay, well, that wasn't that much, right? We're not really, it's not a big deal, right? We're still looking for trades off of the levels, like our ruby zone and stuff like that. But this may not be ready to break out because in consolidation, you see this type of ruby zone hits all the time. All the time. How do I get the colors on my fib? I got you, Darius. Does that make sense, Terry?
Yes, thank you.
When you have a shallow retracement, though, when this thing is barely pulling back, that's letting you know that this is a really an aggressive trend. Okay? And a lot of times in the market, that's like a very emotional, very aggressive type like as we've been seeing, let's look at UJ. Look at this. Look how this thing has just been going up and up and up and up and up. Look right here. Impulsive move. Up. Look at the pullback. It's kind of floating around that 23.6, that 38.2. You see how it's not very deep, and see how aggressive, how steep this trend is? That's what happens when you have a very aggressive trend. It's not going to retrace very far, right? It's not gonna have a very deep retracement. But what you're looking at is you're looking for, there's a gold hit right there. Then it did another impulsive move. There's a gold hit right there, right? So this is just doing normal stuff right now. Nothing too crazy. Looking at the MACD, there's the lowest point. Looking at the highest point, pull back right here. You see, do you guys see this over and over and over again? Okay. So that's the stuff you want to start paying attention to, right? Wondering if you're losing momentum. It's like, nope, we're not even coming to your gold zone, Chuck. We're slowing down right in here. This is a very aggressive trend. Okay, where could the market go to? Well, you start to see stuff like this, right? You start to see stuff like this. Watch this. So you see that aggressive pullback. Then you see like the respect of these zones right here. Okay, we don't normally take trades off the 38.2 or 23.6. We're looking for more gold and ruby. There's way too many to try to chase these very bullish. Because look, when this came here, we was like, oh, we're about to go up, and look how it faked us down, right? So be careful trying to take it off of 38.2 and 23.6. But I just want to show you something. We had the impulsive move up, the pullback to here. Now, these can be our targets, right? 38.2, 50, 61.8, 78.6, 100. These become our targets up to see where the market can go to. So as we play this out, 38.2 is like my take it to the bank. You can rest and you will make your money level. Okay, see how it wicked off that level? And then as we go up, hit our 50%, hit our 61.8. And I think that may have been it. Nope. Yep. Starting to get divergence. Hit our 78.6 and then hit our 100%. Right? So these can be our destinations. You see how it just perfectly wicked off of that 100% and dropped down? So you can use these as take profit targets. Okay. Again, what I did is I took the trend-based fib extension and I started at the impulse to where it stopped to where it pulled back. And then these became future targets. All right. But did I answer your question, Terry? You're good on that?
Yes, you did. Thank you.
Okay. And then Darius, you asked, how can you change your fib colors?
Yeah.
Draw your fib retracement level and then double click on it on the lines, and it's going to pull up your settings, or right click and pull up settings. Once you do that, in here, you can change the colors. So I made all mine white initially. Like I did use one color and made everything white. And then I went in here individually and started selecting colors for my 50%, right? My 83.5, I made that orange. 78.6, I made that, right? My ruby-ish color. And that's all I did. What you could do is you can come down to template and you can save as. Save as and name it. So I named it Chuck Phipps, right? So because I just wanted to have it. I have another template down here for a strategy, another Phipps strategy, okay? That when I switch them, you see how over here, it completely switched up my Phipps. Okay, so you can just save it as a template. Okay.
Okay, got you. Thank you.
The default looks like this. This is what most people's look like when you first load it up. That's what it usually looks like. So once you save the template, then it can apply just like that. All right,
Okay.
let's move on to the Underground Railroad, because the train was for sure leaving the station this week. I mean, it leaves the station every day, but man, we've had some incredible plays. All right, let's talk about that, because if any of us are up trading right before London, we need to be not leaving this money on the table. All right, let me go to a chart that I don't want to mess up, that I can mess up. Let's do Saxon. All right, Underground Railroad. It is going to be based off of the first 8 hours of the trading day. So the trading day session starts at Sydney time, 5 p.m. Eastern. Okay, Sydney opens it up. Now, if you want to have the session breaks on, this lets you know where the market is starting a new day. Okay, so every time I have this right here, this is completely customizable. Colors, I made mine white right here. I can make this yellow or pink or purple or whatever you want, right? You can change the type of line it is, whatever it is that you want, all right? But this is always going to show you where the beginning of the trading day. We know the market's open all week, but it opens the session day at 5 p.m. Eastern. Here's what you want to do. You want to take the first 8 hours of that and you want to identify, box it up and identify the high and the low. So we have the first 8 hours, identify the high and the low of the day, the highest point and the lowest point. And you're going to essentially identify that. Now, what we call this first 8 hours, we call this the A range. Okay, this is called the A range, this first 8 hours of the day. Next, what you want to identify is the last 45-minute candle right here of that period of time. So this would be on the East Coast, this is your 12:45 a.m. candle. West Coast, this is your 9:45 a.m. candle. Okay, we're looking for this guy right here. And what we want to do is we want to actually look for the most recent high. You see this right here. This is the most recent high, right? And you want to take that and you want to line it up with the 9:45 candle, okay? I make mine green to keep it simple because I want to buy above here or sell below the other. Now we're gonna look at the lows. So it's a 45 right here. We got basically this structure right here. Okay, I can't get to my 9:45 candle without cutting off that candle's wick. So we're going to stay a little bit wide because we can't get in there. Now here's what we're doing. We're pricing trapping, pricing trap. We're trapping price inside of our zone. There's going to be a breakout to either the upside or the downside. Okay, the market typically likes to break out of one or the other direction. Sometimes we'll break out and break the high of the day. Sometimes we'll break out to break the low of the day. Okay, but we're looking to catch the breakout. We've trapped price in and it is setting up for a breakout. What we're gonna do is I'm drop down to the 5-minute chart, okay? Drop down to the 5-minute chart. Okay, that 5-minute chart. Now, here's what we're doing. We're looking for a break above or below. Now, we just talked about optimal reversal. Optimal reversal can be used to qualify this trade 100%. Okay, but I also want us to start looking for a couple things. Look around at the price action and look at what has taken place. Well, I just told you guys to start looking for engulfing candles. So here's an engulfing candle. Look at this guy right here. This guy, we can box up this. This becomes a level of supply. Okay, this is a level of supply. This is an area that the market could come back to. Okay, this area right here. Look right here, another engulfing candle, right? Market already came back once and hit it. But this is also an area where the market could come back to. Okay, now another engulfing candle. What are all these engulfing candles telling us? That this is an area of opportunity for selling. For selling. What else do we have? We have our MACD. Okay, our MACD is showing us that we're on a sell on the 5-minute. Showing us that we're on a sell on the 15-minute. We are in bullish territory with momentum, but we are on a sell. And then right here, we're on a buy. So when we're looking at all this stuff, we're looking to see, okay, am I going to get that zero line break, or is it going to push up? So as we press play, we came up to the zone that we first thought was there in the first place. Okay, we knew this zone was here. So now, traditionally, what we're looking for is a close, 5-minute candle to close above our zone, above our trend line. But we got it right here. But should we buy? Probably not, right? Look at our 5-minute MACD. Our 5-minute MACD is still calling for a sell. What else is happening? There's a lot of fall off, right? We had that divergence up here. This high, right? We're starting to see it start to fall off, right? Actually, we didn't have divergence. We had what's called convergence. So we started to fall off. So we had the highs that were equal with the price action, but then we also had the fall off that's happening. And now we're not seeing any real increase in volume. Okay, no increase in this activity here. And now what we could do is, when we see something like that, because we said we're in selling territory, we can enter off of that 5-minute candle close. Stop loss needs to be where? Above the structure. Okay, stop loss above that structure. Usually want to put it above the supply. What else did we just talk about? We just talked about our fibs. When I come down here, if I use the wick, right? Let me come down here because you can see it better. Here's the impulsive move, bounced off this zone. What else? What zone did we say we're looking for? Looking for trades off of our gold zone. Well, what zone are we in right here? This is our gold zone. okay? We have a gold zone in an area that we have a bunch of supply zones. And then look what happens as we play this out. Okay, we're talking about an entry with no drawdown that took us a minimum of 600 pips. An entry with no drawdown that took us 600 pips. Okay, what do we have here? We had the equal highs and we had the fall off. If I zoom into the 1 minute, we'll look at it a little bit closer. We have our gold zone and what's happening here. Look at the MACD. You notice the fall off? This high right here, this high is lower. So the market's starting to make that fall off, even though we have that equal high, that's that exaggerated divergence. And then there's our trade. So the Underground Railroad, I want you guys to start looking for the supply and demand zones that are in the structure that's being created right before the break, right before the A range completes. Okay, start looking at the candlestick patterns. And the main thing I want you to look for are those supply zones in the patterns, okay? In the patterns. I like to switch around, look at the different time frames, look at what I'm seeing, and just see if there's anything that stands out to my eye, right? These major bearish candles are coming in. Just start paying attention to it, okay? That was a 1 hour zone right there. They got retested, excuse me. Does that make sense to you guys?
Yeah.
Cool. Any questions about our Underground Railroad? Again, you can use the optimal reversal system to qualify these trades, all right? Look for the ORS system, because it may not give you the exact strategy where you wait for this and wait for that. But if you look for the system, right, that the vortex is in your favor. So let me just pull it up so we can see. Look at our system here. Sorry, I know it's a lot of colors and stuff happening up here. I'm gonna get rid of the fib so we can get that off at least. Think about what just happened. You had the equal highs, had a supply zone. And then what do we have? Our vortex cross. What did we just talk about for optimal reversal aggressive? You guys let me know. What were the aggressive rules?
Fib level,
Do we have a fib level? Was this a fib level?
yes.
Which one?
Gold zone.
Gold zone. Okay, great. What else do we need to have?
We need to go down to the 1 minute. I can't see if you are, no, you're not on the 1 minute. So we drop down to the 1 minute and we see the 4 and 20 cross, that we do have that. And we also have a 0 line break in the 1 minute. So we're good to go for aggressive.
0 line breaks right there. Was that all the rules for the aggressive?
Yeah, I think so. On the 5 minute, we go back to the 5 minute, we just need to see that it's also on a sell and do not require a 5 minute break of structure or 0 line.
Okay. And we had a bonus because we got a 0 line break. Right? So that's, man, we have everything that we need. There isn't any reason that any of the people on this call, if we take the time to go over the concepts that we talked about today, our fib levels, right? our supply and demand levels, right? Understanding how these moving averages are playing in our favor. Like right here, if I bring this guy up, we can see look what we also had right here. I introduced the 200 moving average to us, but look what just happened on the 1 minute. We had our 4 and 20 get below that yellow 200 as well. What is that 200 significant of? It's significant of an overall change of direction. You guys see that? An overall. So now we have a 420 cross that happened below a 200. And you guys saw the magic that just happened. Okay? So, matter of fact, it was some serious magic because let me show you this. Okay, you're talking about the potential from our Underground Railroad entry, Optum reversal qualifications. None of us probably would have held this for that long, but that's the type of entry that we had with zero drawdown. That's insane. That is insane.
How many pips is that, Chuck?
932 pips with a stop loss that was about 80 pips. Okay. Now,
How long did it take to get to that, Chuck?
you would have to hold it for like a day and a half. But I mean, man, you were in profit. Let's see, just a penny. So look at this. And this is where I know we just hit our 11 o'clock mark, 1 p.m. in the East Coast. So I don't want to stay on for too much longer. I'm available to you guys if you want, but look at this. Let's just say that we didn't hold it forever. We just took that initial, which is really our trade, the thing that happens up until midnight. Well, that's 600 pips on our Underground Railroad trade with an 80 pip stop loss. That's insane. But as you see here, what did it do? Business as usual, went to our goal zone, and that became the next buy opportunity. So you had, I mean, that trade right there was crazy. But then you had the re-entry off of that trade that would have never came back to put you in drawdown or anything after that. So, you know, there were opportunities. Let's realistically say, you know, you took the midnight trade and you held it till the morning. You woke up with 300 pips, 344 pips, right? Or let's say you slept in a little later and you woke up at 8 o'clock and you're up another 600. Like, that was an insane trade. It's not gonna happen like that all the time, not even close. But what I'm trying to say is what happens all the time is our gold level hits, our Ruby hits, and our Underground Railroad leaves the station every day, every single day. Okay. Any comments or questions before we wrap this up? How you guys feeling? Talk back to me.
Awesome sauce. Thanks, Chuck.
Who was that? Was that the birthday lady?
No, it's Maddie.
Mad sexy.
That's the birthday. Wasn't your birthday just a couple days ago?
Yes, it was.
Yeah, I think Troy should come on and sing happy birthday.
I think so too.
You said it. They sing it. Take it, my friend.
Come
Take
on, Troy, get those vocals straight. Me, 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 me.
Wait, we got a concert going on?
Yes, and it's featuring Troy Wilkinson.
I'm in. Stassi's in on the concert.
Cool.
On the concert.
Happy birthday to you. Happy birthday.
Happy birthday to you.
Thank ya.
Yep. Hey,
Troy, you was coming in a little flat, baby. A little flat D there.
I wasn't committed. I wasn't committed.
Come on, Troy.
Troy had a big finish. He didn't get to it.
Oh, okay. Okay. Oh, man.
It was
this
my
was
birthday too on the 14th. So Pisces
Oh, my
gang.
God. Happy birthday.
Yeah. Thank you. Thank you.
This was such a really great training. Thank you so much.
It really was, and I would love to get other people's feedback. If you're new, it gives us the ability to customize the training and make sure that we're speaking to all the different levels. We have all different levels on the Zoom right now, but please take the time to give us the feedback. Give Chuck some feedback for his teaching, but just what you got, what's clear, what's not clear. If you got any aha moments, those are things that are very helpful for the teaching. And trust me, if you have a question, somebody else is probably thinking about it as well. If you have an observation or you want some clarity, that's what this is created for. You guys to be able to ask the questions, confirm some things, get clarity on some things. So we all learn and grow together, right? My good friend Cedric Rashad, he always says, don't steal from the team. And when you don't contribute, you don't have to stealing, because we all are coming here to learn how to identify these opportunities in parts and take advantage of the opportunity, especially right now more than any other time. There's a lot of volatility. There's a lot of great opportunities, but we have to get the understanding of how to read these charts accurately. So if you have any questions or concerns or need something really enforces some clarity, now would be the time to ask questions so we can get this feedback.
Well, Chuck, this is Dr. Flaxey, and it's been a long time. For those that don't know, I'm in rehab. I had another stroke, and I'm glad to be able to listen to you all. And the teaching this morning by the young man was really motivating to me, and I look forward to being here again.
It's good to hear from you, Dr. Flaxey.
A lot of love and a lot of light, Dr. Flaxey. Love you so much.
What I want to say is I definitely want to give $1 trillion Troy. Earlier, Troy, you said something to the effect of, passionate. And, I'm relatively new, but not as new as some people that may be on the call. But, I consistently get on like every Saturday. I'm on here every Saturday, and every Saturday, I catch something. I, have these aha moments. I always tell my big brother Chuck that, I learn a little slower, I suppose, but, my brain has to connect the pieces. So I went from like literally crying at the thought of optimal reversal. Now, I pretty much know the steps. I need to get the courage to reteach, but then, introducing optimal reversal aggressive, constantly getting on here, I'm like, oh, okay. And then, lastly for me is the fib levels, using the fibs. And I was like, man, what is my big brother doing? Like, I just got optimal reversal. And then he's throwing, the fib levels, but again, consistently coming on here and just, watching and paying attention and taking little notes. It's clicking. So I do catch something, every single time. So definitely thank you, big brother, for, your commitment to us on every Saturday.
No problem. Anybody else have anything you want to share? How you guys feeling?
I just appreciate you always teaching. You know, I always learn something new, you know, or reinforce something new, or reinforce something that's old, you know, looking out for certain things.
Yeah. What specifically you gave?
For me, again, it's, you know, like, you know, I got chopped up this week on the consolidation on that one day. I just have to realize that when it's hitting the Ruby zone a lot, it's not going to do its breakout. That's when it's going to look at more consolidation than anything else. More that the takeoff one that I'm looking for is coming off the gold zone, not the Ruby zone as much. So, you know, I was in the right moves for a takeoff, but that wasn't the what it was doing at the time. So I need to pay attention to the hidden Ruby zones. All right, we're probably looking at more consolidation than a move.
That's actually a good takeaway. Yeah. Cool.
This is Terry. I want to say that my takeaway today, this has like been my second week here, but was when you talked about the period. I think it was the period for the vortex.
Oh yeah,
Playing with
change
those numbers.
vortex period.
I'm gonna look into that and see how to, you know, from 7 to other numbers, how that looks and works.
So recapping that, let me pull up the vortex again. I'm gonna put two of them on here, and you guys can kind of see what we're going back to what we were talking about. Our normal one is usually a 7. Okay, that's for the op-reversal strategy. But what we talked about was possibly utilizing it, that in the longer time frame. So if I change this to a 200, right, it now gives me a little bit more insight. Check this out. So you guys see where that retracement happened at. Look at hitting the gold zone. Look at the higher 200. 200 vortex is still saying, actually this is backwards. Wait, is it backwards? No, it's right. It's just that slow. No, that's right. 200 is probably too much for this example. Yeah, it is. Let's pull it down to like 100. Too much. But to that point, check this out. You had this pulled down, right? Well, this actually, because this is still bullish, this lets you know that this probably isn't really, really ready to make that breakout. So that's a way that you could interpret how far this thing is gonna go down. Like, are we really gonna break out of this space? Because the vortex on the higher time frame is saying no. Now, let me do it to more like a 50. Okay, look right here though. This is where we had that cross at, and then this became the pullback. So this pullback off the gold zone is pretty cool because you can see that this is testifying that, yeah, that pullback happened, but you know what, Chuck, overall, we're still in a very bullish territory because we just got that cross. So try to kind of play with these things. I haven't experimented yet to see what the perfect setting would be for us to start incorporating a longer term vortex. But just understand that when these crosses happen on these higher time frame or higher period amount of candles, that you're going to have a lot more data to support the longer play, right? 50 seems to be a pretty decent one. Right here is where the 50 initially crossed that. And then we had the pullback, right? We saw that pullback right here to our gold zone. We got this gold zone, and then we got the vortex cross on the 5 minute. You guys see that? We had that 5 minute vortex cross right in here, and then look at our 50 vortex. So just play with it, right? Also play with our, as we said, our moving averages. Look at that longer term moving average, the either the 100 or 200. And when you come in here, just start looking at the overall structure. So we talk about trying to get that bigger play, right? Look at where this thing is crossing down at, right? Right here. And then also, if I go down to the 1 minute, you can really see what happened in there is we had already dropped below that 200, and all we did was retest it. So it'll take a little bit of time, but it'll be something pretty cool to experiment. That's actually a good takeaway from me, Terry, as well, because I didn't come into this trying to teach that. I just, got to it throughout the call. So thanks.
So everybody, since we're all pretty much on lockdown in the world right now, recommend, especially the newer people, watch this video multiple times throughout the week. Not just once, but multiple times.
Yeah, it'll settle in. Queen, were you gonna say something? I know your mic was open. Anybody else want to say anything?
Oh, I think you may have done it before, but I'm going to add that 200. I like it.
Yeah, it's pretty sweet to let us know like the overall direction. Yep. Cool. Everybody else good? Trillionaire Troy, got any last words?
Mm-hmm.
I just received the Trillionaire Troy.
Yes, sir.
No, man, it was a very effective session, and I just encourage everybody to, implement and study further what they got exposed to today. That was a great session, man. It was very concise and effective. I think a lot of people got a lot of value from it.
Cool. All right. Well, last night, me and my cousins, my wife's cousins, we did a virtual game night. So we utilized Zoom just like this, and we played a few different games that were online. It was pretty cool. Even some of our younger cousins joined in. So try to think creatively. I think we move in impulses and corrections in the market, but we do in life too. And I think part of the correction that we're having right now is back to things that matter, correcting back to things that matter most. And we are actually we're now being forced to be with our families and to really one person made a joke. They said this out of this season we're going to see breakups or makeups, right? There's going to be relationships that's like, oh yeah, we're not supposed to be together, and then other relationships where they rekindle. Overall, take advantage of this to really, I know it's an adjustment, and for many people I have a lot, my heart goes out because you have your kids and trying to get your work done, but also try to find the value in this time of being able to reconnect with with those that matter. Not all you guys are locked down like we are in California, but definitely we'll get through this, but let's get through this being better. Let's get through this with growth in our accounts and growth in self. So I love you guys, love and appreciate you guys, and
Love you right back, boo.
Love you too, Chuck. Thank you. This was a great session, Chuck.
Very cool. You have
Really
a
appreciate it, Chuck.
Yep. Everybody have a wonderful week, and I will get this recording out in the next couple hours to those that want it. So, talk to you guys later. Bless.
Love everybody. Ciao.
Take care. Be safe out there.
Hey, Chuck, did you send that out last time, or do you have to request it for the recording? I know you asked for our our email addresses.
Yeah. If you ever request it and don't get it from me, just follow up. I'll send.
Oh, okay.
But
No
I would
worries.
say this week is probably. I don't know. I feel like this one probably had what last week had, minus like maybe the market structure stuff we talked about. I think this one is enough to rewatch versus the last one. But I will send last week's to you as well.
Oh, no, this one will be fine. You know, I don't need last week's. You can just send this one and I'll be okay.
Cool. What? Who?
Okay.
I'm talking.
No, I said this one was amazing. This one had everything. But
Yeah, I think this one had it all too. Cool. All right, you guys.
All righty. Have a great day. Be awesome.
Hi, everybody.
Bye, everybody.
Dale Carnegie said, most of the important things in the world have been accomplished by people who have kept on trying when there seemed to be no hope at all. Arise, champion. Now, perseverance transforms average, everyday people into world champions. So the key to victory, the key to success is never giving up. And in order for you to do that, arise, champion, you're gonna need a strong why to prevail, a strong reason to keep going. You see, the more difficult your obstacles are to overcome, the more you must keep your reasons for succeeding in front of you. Vince Lombardi said, the difference between a successful person and others is not a lack of strength, not a lack of knowledge, but a lack of will. Success is not about how you look on the outside. Rise, champion. You might look like a Lamborghini, mean and clean everywhere you go. But see, I'm interested in what's under the hood, because that's what really matters. When life hits you with that brick, and you get knocked down on that mat, and I'm talking to the Linda Rouseys of the world, the ones that have been knocked down once and twice, and everybody out there is calling you a failure, everybody out there saying it's over, what are you gonna do? Rise, champion. I don't even think they should be able to call you a champion until you've been beat, because even losers keep going when they're winning. But when you get hit with that brick and you on that mat on your back, arise, champion. Then we separate the cream from the crop. Only when you're down 25 points on the biggest stage, like Tom Brady, and you come back and we call you the greatest of all time. Abraham Lincoln said, I am not concerned that you have fallen. I am concerned that you arise. Champions make adjustments, not excuses. Get up! The ground, the mat, being on your back is no place for a champion. Get up! Rise, champion. Now you at that crossroads. The decision you make now will ultimately define your legacy. I'm speaking to the Tiger Woods of the world. Each loss, each setback, each heartbreaking disappointment will try to disguise itself as failure, but it's all a lie. And let us not grow weary of doing good, for in due season we shall reap if we do not give up. Many times on the road to success, you're gonna feel crushed, exhausted, and alone. See, life is not like Little League. Arise, champion. They don't give away participation trophies. There's the champions and everybody else. It's one or the other. How do you want to be remembered? Each time life knocks you down, arise, champion. You must bounce back with an even greater hunger to succeed. The ones that have the hardest time doing this are the ones that have weak whys. Now you can only go as far in life as your why will carry you. Champions have self-awareness. They know why they want what they want, and that why carries them to the promised land. The why is the birthplace of all champions. She is the mother to all legends and all the greats in every field. The more deeply you are connected to the thing you're trying to accomplish, the more likely you are to achieve it. Natural talent and ability, that's all good, but it won't carry a quitter. So you gotta find a why that makes you invincible, that you can run through walls with. Get up! Nietzsche said, he who has a why to live for can bear almost any how. And I'm not ignoring what you're going through. Get up! And I'm not gonna sit here and lie to you and tell you it's gonna be easy, cause it's not. It's gonna be a struggle. You're gonna have to fight and claw and scrape your way up out of this thing. But you can do it if you wanna do it. Now, are you a pretender or are you a champion? You can't have a testimony without first having a test. The whole world is watching you right now. Get up to see how you respond. Show them what you made of. Never give up.
Thanks, Chuck. Appreciate you, brother.
Hey, it's Brian from Samcart, and if you're trying to build a real
Blessings,
business
man.
online, but
Y'all have a good one.